Yes everyone, so hello, hi, namaskaram my dear warriors. I hope you guys are doing really well. So are we ready for the Maja my dear warriors? So this is going to be a very special video for all my dear CMA final students, because guess what? We are coming up with a rocket revision for the subject of SCM exclusively for our CMA final students. So we'll start with the rocket revision, but before that, quick set of instruction for you guys. Please do not miss out on this. Yes, point number one is this is not going to be a detailed revision. Now understand the sequence in which things will happen. First, there is a regular batch which is roughly around 170 hours. Okay, full SCM. Then there is an exam oriented batch somewhere around 100 hours. Then you may be having a detailed marathon revision, okay, which the entire subject may go to somewhere around 20-25 hours. Then to help you guys just to retain things, just a quick repetition of things is what we have introduced called as the rocket revision. Here quickly all the concepts that we have explained, we will quickly keep repeating so that things fall in a proper framework. Point number one. Point number two is it has to help you to revise the entire subject in that one day before examination. Just one day before your examination, you should be in a position to revise. So keeping that in mind, we have come up with something called as a rocket revision, a quick, fast revision. So a very important caveat, I will not be explaining the logic in this video. For each and everything in the entire subject of SCM SFM, yes, I have promised you, we will learn it logically without having the need to by heart even a single formula. You won't even by heart a single formula. Everything has a logic, everything has a story. I will tell that to you. But this is not the place for that, my dear students. So, yes, if somebody is watching the video for the very first time and they want to see, yes, how this person is teaching SCM, this video is not for you. Go refer to demo lectures of regular classes. Go watch our detailed marathon. This is for students who have already listened to the subject. Ideally, students who have taken classes from me or you have taken classes from somewhere else. You want a quick recap, one unit just in 10-15 minutes. That is what this revision is for. So please keep in mind the objective. Here I am not going to explain you guys the logic. Is this clear, everyone? Yes. Why we have come up? Yes, for a quick revision. You have learned the subject. Yes, you've revised it one time. You've understood it reasonably, but you want all things in a proper framework in the lowest possible time. Every unit 10 minutes, 15 minutes maximum. That is why this is there for. Point number two, yes, it is very beneficial for you guys in your one day before examination, because you will be having only one day. In that time, in the lowest possible time, roughly in 4 to 5 hours, the entire costing portion, quick rocket revision will be doing. Is this clear, everyone? Point number one. Point number two, yes, if sir, we want detailed revision, sir, we want to understand logics and all. Yes, ideally, you should be buying the full-fledged recorded classes. No sir, we want to listen to the marathon. Detailed marathon is available on our YouTube channel Think with Tabish. So you guys can go refer to the detailed revision marathon there. You guys see that? Yes, just across I guess the last 4 months we've got a good reach. Students have put in crazy amount of love. Thank you so much for that. It really means a lot. So students from all across India are loving that. They are sharing that. So because of you guys, we are whatever we are. So always grateful for you guys for the love and the support that you guys are giving. Okay, the next point is we have come up with something called as a quick audio revision. Now once you have learned the subject once, to ensure that in the lowest possible time, say roughly in 5 minutes, you want to revise a unit. Say morning you woke up, you are going for a small walk, you want to revise 1 unit of SCM. Or evening you are just having a sip of tea. In the meantime you want to revise a unit of SCM. For that purpose, every unit of SCM in roughly 5 to 10 minutes, we have come up with something called as the audio shorts, audio revision. Sir, where do we get this? It is already there on our Telegram group, Think with Tabish. So what you guys have to be now only, don't forward. I know your word. Do not forward. Now itself, pause the video, go to Telegram group, Think with Tabish. There you can see. Yes, you can just search SCM audio revision. You will find the entire file. Is this clear, everyone? Yes, perfect. Next thing is going to be, yes, if you want to purchase the entire recorded classes for SCM as well as SFM, either for you or for your juniors or for your friends, yes, you can visit our website thinkwithtabish.com or contact us at 8310246880. Sir, you told this is a marathon revision, sir. What year, sir? Some konja promotion, some papa people. Okay, everyone, don't worry. From here on, it is going to be purely, yes, the discussion only. Don't worry on that. Is this clear, everyone? Yes. Now, couple of important pointers for you guys. Yes, we have also come up with something called as SCM theory marathon. Very important, beautiful revision. Trust me, theory comes for roughly 30 marks in your examination, and no faculty in the entire nation is teaching you theory. You go there, you by default leave theory for option. But trust me, that is the most simplest scoring portion. To ensure that you guys do not miss out on that, we have uploaded something called as a theory marathon, a must watch for you guys. Trust me, in 4 to 5 hours, the entire theory of SCM, in the most beautiful way, we will understand. Yes, we'll give you crazy creative ways to remember that. We'll give you mnemonics, stories, some places songs. Yes, we'll build the logical flow so that you guys remember it. I'll give you guys a summary chart using which in a roughly 5-6 pages, the entire theory portion you guys will be in a position to revise. So that video will be uploaded in a day. So please do watch that video as well. Yes, and one more very important thing. Yes, you watch the video, watch it at standard speed. I know some of you guys have already put at 2x. Yes, understand. Regular class, exam oriented class, marathon, rocket revision. It is already at rocket speed. Don't try increasing the speed again. You are watching the marathon to help you, not to get that happiness feeling, okay, I watched the marathon. Please, humble request, please watch it at the normal speed. Please, trust me, the value addition that you are going to get is crazy. So please watch it at normal speed. It is already a rocket revision. Is this clear, everyone? Yes. And yes, needless to say, if you love our work, yes, please do share it to all your friends. And yes, please do put a comment. Okay, sir, why should we put a comment, sir? For you should be doing promotion. Simple point. Say there are so many students and there are so many marathons available on YouTube. How will a student get to know that this marathon is actually beneficial? Will a student watch the entire marathon? No. He will just see the initial 2-3 minutes and he will see the comments which is given below. So if the comments actually tell that these marathons are adding value, they are amazing, maja is coming, okay, students will get that interest, they will watch. So obviously you would have got the benefit. So it is your duty to ensure that your friends also get the benefit. So if you see, if you enjoy, only then, I am not asking, if you enjoy, please do put a comment that yes, you have gained value from this so that other students can also watch it. Is this clear, everyone? Perfect. Now from where we have picked this, now what I normally do in our regular classes is once a particular unit is over, a chapter is there, say for example decision making, that chapter we have bifurcated into 10 units. First one we are having basics of decision making, then we have relevant costing, then we have transfer pricing, product life cycle costing, asset life cycle costing. This way I have bifurcated into 10 units. Yes, at the end of every unit I normally take a 10-minute revision for every unit, wherein the entire unit from start to end, all the pointers I will quickly tell, plus whatever practical questions we have solved, any key tricky adjustments are there, that also I will quickly be telling in those 10 minutes. So all these revisions at the end of every unit, yes, I have compiled it here and gave it to you guys. The reason why I am telling is from here whatever video is going to come is going to be a recorded video, point number 1. Yes, these are taken at different points. So you will keep finding different color shirts. It is like magic. 5 minutes I will be wearing a white shirt, 5 minutes I will be wearing a black shirt, 5 minutes I will be wearing a yellow shirt. Okay, so don't tell sir what is happening in this. Watch the video, learn, give your best in the examination, crack your examination. And remember, yeah, the journey may be tough, but we are warriors. We'll give our best, have a broad smile, fight till the very end and ensure that we win this battle. That's all, my dear students. Happy learning. See you guys on the other side. Yes, everyone. So one important pointer I missed out to inform you guys. In this video, we will only be discussing the practical portions. That is, whatever is important for us to solve practical questions. Theory marathon is also there. That is going to be in a separate video. Is this clear, everyone? One final revision of this unit. So how many times we revise, sir? One final time now, for my happiness. One final short revision. Are you guys ready? Yes. Perfect. Giving you guys 10 seconds to get yourselves into that zone of revision. Yeah. So we'll start the revision in 3, 2, 1, start. So marginal costing, first unit, that is the basics of marginal costing. 3 concepts: basics, basic formulas, special situations. Basics of marginal costing. We told every short-term decision we are going to take on the basis of marginal costing. Sir, how do we take a decision? Marginal cost, marginal revenue, we will compare. Marginal revenue is greater, accept. Marginal revenue is smaller, reject the decision. Sir, what is a marginal cost? It is the extra cost to manufacture 1 unit extra. Normally, it is variable cost only. Okay, perfect. Basic assumptions of marginal costing. If nothing is given, we will assume that selling price per unit, variable cost per unit, total fixed cost is going to be constant. We made a promise to ourselves. Yes, throughout our entire life, whenever we see sales data, we will write it on per unit. Whenever we see variable cost, we will write it on per unit. Whenever we see fixed cost, we will write it on total basis. Perfect. Then comes concept 2, which is going to be our basic formulas. In that, the first one is marginal cost sheet. Sale minus variable cost is contribution minus fixed cost is profit. Concept of contribution. What is contribution? It is a net cash that I get by selling one unit of goods or service. It is my selling price minus my variable cost. Perfect, sir. My selling price can be bifurcated as variable cost and contribution. My variable cost is how much percent of sale, variable cost ratio. My contribution is how much percent of sale, PV ratio. Both of them are complementary. I add, I should be getting 100%. Next point is break even point. No profit, no loss. At a break even point, three things are happening. Profit or loss is zero. That means total sales is equal to total cost. That means contribution is equal to fixed cost. How do I calculate my break even point? Simple. You have the formula fixed cost by contribution per unit or fixed cost by PV ratio. Ignore that. Yes, BEP means no profit, no loss. But sir, 10,000 fixed cost I should pay now. To pay that, how much cash I want? 10,000 I want. 10,000 contribution I want. Every unit is giving me how much? 400. That means how many units should I sell? 10,000 by 400, 25 units. 10,000 contribution I want. It is how much percent of sale? 40% of sale. That means what is my sale? 10,000 divided by 40%, 25,000. Using that example I have explained. Perfect, sir. Next we are having margin of safety. Now, margin of safety. Firstly, what is margin of safety? It is my sale after break even point. Perfect. Next, I told my total sale can be bifurcated as BEP sale, MOS sale. BEP sale is how much percent of total sale? That is my BEP sale ratio. MOS sale is how much percent of total sale? That is my MOS sale ratio. Both of them are complementary. You add, you should be getting 100%. Then one more observation we told. What was the observation? BEP is there, MOS is there. Tell me, in BEP, will I be earning even 1 rupee profit? No, sir. At BEP, my profit or loss is equal to 0. That means whatever contribution I will earn, where it will go? It will go to pay my fixed cost. So my contribution will be equal to fixed cost. BEP is over. After that extra sale I am doing, margin of safety. There, do I need to worry about my fixed cost? No, sir, already recovered now. In MOS, my fixed cost is 0. That means whatever contribution I will get, what it will be? It will directly be my profit. Yes or no, everyone? Based on that, however we want, we will play with margin of safety. Perfect, everyone. Yes, the next point is sales to achieve my desired profit or loss. Tell me, students, if I want a profit of 2 lakh, whether a contribution of 2 lakh is sufficient? No, sir. Fixed cost I should pay now. So it is a fixed cost plus a desired profit gives me my desired contribution divided by contribution per unit or PV ratio. Is this clear, everyone? Then we have discussed the magic box approach to solve all questions. 5 observations. Point number 1. My PV ratio and variable cost ratio is complementary. I know one, I will calculate other. Point number 2. My BEP ratio and MOS ratio is complementary. I know one, I will calculate the other. Point number 3. At BEP, my profit or loss is 0. That means whatever contribution I will earn will go off as fixed cost. Contribution equals to fixed cost. Point number 4. At MOS, my fixed cost is 0. That means whatever contribution I will earn will directly be my profit. 5th point, sales to achieve desired profit or loss. Yes, to earn 1 lakh profit, 1 lakh contribution is sufficient. No, sir, fixed cost also I should pay now. So it is fixed cost plus desired profit. Is this clear, everyone? Yes, one humble suggestion for students who are watching recorded, please don't watch it in 2x. Please repeat for yourselves. I am repeating so many times. Yeah, we all feel bored. But I have told you, boredom is the gateway for greatness. So we'll have to be ready to accept that, grow through that. Is this clear, everyone? Perfect. Yes. Now we are having concept 3, which is going to be special situations. In that first one is a differential formulas. Okay, perfect, sir. What is it telling? Yes. First we have 2 observation. Change in total cost is nothing but my change in variable cost when 2 different levels of output is given. Change in contribution is equal to change in profit. Based on that, we have 2 formulas. Variable cost ratio. What is the formula? Original variable cost by sales. I can also write it as when 2 different levels are given. Change in variable cost by change in sales. It is also change in total cost by change in sales. Perfect. Then we have a PV ratio. It is contribution by sales. I can also write it as change in contribution by change in sales. It is also change in profit by change in sales. Is this clear? So whenever we have a question, when two different levels of output is there, first step, I will calculate PV ratio or variable cost ratio. Based on that, compulsorily, second step, I will calculate fixed cost. Based on that, I will go ahead and do my calculations. Is this clear, everyone? Perfect, sir. Next point is going to be my cost indifference point. Where did it go? Okay. Cost indifference point or cost break-even point. Firstly, okay. When does this situation arise? I do not have a space. Okay. Firstly, when does this situation arise? Okay, I have two or more alternative to produce goods or services. One alternative has lower fixed cost. One alternative has lower variable cost. Okay. What is the cost BP? It is at that point where total cost of both the alternatives is same. Then, sir, how do I calculate cost BP? Yes, it is a difference in fixed cost divided by difference in variable cost. Alternative having lower fixed cost, that was good. But if I want to choose the other alternative, diesel car I have to purchase, means 1 lakh extra fixed cost I have to pay. That means at least 1 lakh benefit I want. How will I get a benefit? Every kilometer 10 rupees. That means how much kilometers I should travel? Yes, difference in fixed cost divided by difference in variable cost. How do I take a decision? Simple, boss. I have my cost BP. My usage is very less. I don't use only. Which alternative is best? Alternative with the lowest fixed cost. Yes, my usage is very high. Where will I go? Alternative with the lower variable cost. Is this clear, everyone? Perfect. Clear. Shall we proceed further? Now, if you are having three options, first take a pair of two each. A and B, B and C, A and C, calculate cost BP. Then decision making line should always be straight. First, usage is lowest, means alternative with the lowest fixed cost. Usage is highest, means alternative with the lowest variable cost. In between the two, I have the balance alternative. Is this clear, everyone? Yes. Perfect, sir. Next, I am having my shutdown point. Yes, if business is very less, instead of continuing, I can discontinue. Sir, what is the benefit? I can save some fixed cost. So, what is going to be the formula? It is going to be savings in fixed cost divided by contribution per unit or PV ratio. If I discontinue, I can save some fixed cost, but if I continue, I will be earning some contribution. Which one is better? I will see by discontinuing how much benefit I will get, savings in fixed cost, divided by continuing for every unit how much benefit I am getting, contribution per unit or PV ratio. How do I take a decision? Draw a line. Assume my sale is very less, no customer only. What will I tell? Shut down the business, go home and sleep, discontinue. But my sale is more than the shutdown point. What will I tell? Continue the business. Is this clear, everyone? Perfect. Then we have told net savings in fixed cost. If question gives me shutdown as well as a reopening cost, my net savings in fixed cost, it is my savings in fixed cost minus total this much benefit I got. But to get this, I have incurred shutdown cost as well as a reopening cost, minus shutdown cost minus my reopening cost. Is this clear, everyone? Perfect. After that, we had discussed product mix decision, limiting factor decision. Yes, we have told what is a limiting factor. Any factor which is in short supply. How do I take a decision? Whenever there is a limiting factor, decision is not taken based on contribution per unit. It is taken based on contribution per limiting factor, which is contribution per unit divided by limiting factor per unit. What are the steps? Step 1, check if the resource is a limiting factor. If it is, then what should we do? Calculate contribution per unit, calculate contribution per limiting factor, which is contribution per unit divided by limiting factor per unit. Based on that, give the rank. Based on that, allocate the resource. But sir, if a minimum demand has to be fulfilled for any product, first produce that. For the balance resources, only allocate as per the rank. Is this clear, everyone? Perfect. Next thing we have discussed is whenever there is a change in cost structure. Promise was once made, whenever we see change in selling price or variable cost, how do we show the change? On per unit level. Whenever we see the change in fixed cost, how will we show? Total level. Concept over. Then the final thing that we discussed was whenever tax rate is given, what we'll have to do? Very simple, students. Till now we have just done sales minus variable cost was contribution minus fixed cost is profit. This is my profit before paying tax. From this, I will pay tax and arrive at profit after tax. Is this clear? Question tells I want 1 lakh profit after tax. Assume my tax rate is 30%. Simple, I will tell. Assume I earned 1 rupee profit before tax. Yes, question has told me 30% is tax rate. That means how much I will get after tax? 0.7. That means if I want 1 lakh after tax, how much I should be earning before tax? I will do that. Then it's the same story going forward. Is this clear, everyone? Perfect. So with this, we have had the comprehensive revision of unit 1 in 10 minutes. So quickly, let us revise the second unit, which is going to be relevant costing. So firstly, I told there are 3 components of marginal cost. What are those? It is a variable cost, specific fixed cost, opportunity cost, if any. Yes, now we came into the second unit, which is relevant costing. So the first question is, sir, what is a relevant cost? It is the cost which is relevant to take a decision. That is, it is incurred only if I take a decision. Otherwise, it is not incurred. Okay, boss. Different costs and their treatment. Firstly, we have told historic cost, sunk cost, committed cost. Already incurred in the past, irrelevant for decision making. Then we have told fixed cost. If it is existing cost, allocated cost, it is irrelevant. If it is additional cost, specific cost, traceable cost, avoidable cost, it is going to be relevant. Then we told opportunity cost. It is the cost of the sacrifice. It is the maximum contribution foregone by rejecting other alternatives. It is not a real cost. It is just a notional cost. But for decision making perspective, it is always relevant. If you are incurring any out of the pocket or additional cost, that is also going to be relevant. Is this clear, everyone? Perfect. Then we have discussed relevant cost in case of material, labor, overheads and machines. Firstly, coming to material. What is going to be our framework? Material. Whether is it in stock, is it not in stock. If raw material is not in stock, what we are going to do? Purchase. That means purchase cost is going to be relevant. Raw material is in stock. Again I will ask, boss, is it regularly used? Not regularly used. If it is regularly used, means what is going to be relevant? The replacement cost. I will have to replace that. Replacement cost is going to be relevant. If raw material is not regularly used, means what I was planning to do, sell it off as scrap. That means it is the realizable value or benefit from alternate use, whichever is higher. One additional point we had discussed, raw material is in stock, very important, aram se we should do, plus it is not regularly used, plus I am incurring a cost of disposal. In that case, what I will do, cost of disposal I will reduce while calculating my relevant cost, because it is an opportunity gain. Is this clear, everyone? Perfect. Purchase price, replacement cost, both are going to be one and the same. Perfect. Next is relevant cost in case of labor. In case of labor, what is it that we are going to ask? We will ask whether we are getting the work done from existing employees or new employees. So new employees means whatever the wages we are going to pay is going to be relevant. But if it is existing employees, again we will ask, yes, is there spare capacity? Is there no spare capacity? If there is a spare capacity, means nothing we are doing. Free time was there, we got the work done. Relevant cost is 0. But if there is no spare capacity, means yes, we are sacrificing some existing work and doing this. That means the wages that we are paying to them plus the opportunity cost, both are going to be relevant. Is this clear, everyone? Perfect. Next is going to be in case of overheads. Yes, in case of variable overheads, it is variable cost, always relevant. In case of fixed overhead, if it is existing overhead, means irrelevant. If it is additional, specific, avoidable, means it is going to be relevant. The final point is in terms of machine. For machine, we are going to ask whether the machine is in our possession. That is, are we having the machine or we are not having the machine? It is not in possession. Tell me, students, if you are not having the machine with us, means what we will have to do? We will have to get the machine. How? Either rent or purchase. So it is rent paid or net cost of purchase, whichever is lower we would have chosen. What is net cost of purchase? It is a purchase minus resale value. Perfect. Now the machine is in possession. We are having the machine, boss. We will again ask, is it regularly used or not regularly used? If it is regularly used, means it is going to be the fall in the replacement cost. If it is not regularly used, means it is the fall in the realizable value. Is this clear, everyone? Perfect. Now different situations we had seen. Point number 1 was material is on order. That means I have ordered my raw material. It is as good as material is in stock, because I have already ordered, I have already committed for that. Is this clear, everyone? Yes, material Z is to be ordered. That means I have still not ordered. It is as good as raw material is not in stock. Perfect. Now one more thing was, foreman was about to retire immediately at a pension of 60,000, but because work was there, we told, boss, extend it for 1 more year. He is asking, what will I get? We told, yearly salary 1,50,000 I'll pay. That means how much is irrelevant? If he retired immediately, yearly he would have got 60,000. But because he extended, we have to pay 1,50,000. That means how much extra we paid? 90,000 extra we paid, that is going to be relevant. Is this clear, everyone? Avoidable overheads is always going to be relevant. For the machine, if I am incurring some additional cost to operate the machine, operator cost, electricity, etc. is always going to be relevant. Next, what else we had seen? Routine maintenance is given. Question is telling routine maintenance weekly 40 rupees. But because this contract was there, my maintenance cost is 60. That means how much is relevant? Only that extra 20 is going to be relevant. Perfect. Yes. If question has given any provision for increase in cost, etc., that is all in your books of accounts. Here it is going to be irrelevant. Market research survey cost already undertaken, already done and dusted, the boss, it is going to be irrelevant. Default assumptions by the institute everywhere. Wherever you see variable cost, question doesn't tell you anything. Material, labor, variable overhead, direct expense. It is always assumed to be relevant. Fixed overhead, wherever question does not tell anything, default assumption is it is always going to be irrelevant. Is this clear, everyone? Question asks us the minimum price. What we will do? We'll add all the relevant costs, total how much we are getting, that much bare minimum we want. Is this clear, everyone? Perfect. Then we told shadow price of labor. It means that if we have one extra unit of the limiting factor, how much extra contribution we can be earning. Is this clear, everyone? This was the second unit for us, relevant costing technique. A beautiful unit, considered to be a difficult one because beautiful questions are there. Every attempt has been made to make this simple. Yes, obviously we are at the final levels, so there will be questions, I have told you first day, which will unsettle you for a while. Okay, the simplest way out for that is for me to not solve those questions, but in that case I am not making justice for you guys. Okay, do not choose simple, do not choose easy, choose greatness, always choose the hard. Okay, but every attempt has been made to simplify each and everything, break it down and make it digestible for you guys. So I hope you guys will go back, first prepare a summary notes of the entire unit, go through all the questions again, each and every small adjustment wherein you feel you might commit a mistake, prepare a separate adjustment note. Maximum adjustments I have covered here, but if you feel there are more things, prepare a separate adjustments for that. Trust me, after that you are revising. 10 minutes maximum, the entire unit with all the questions, you will be in a position to do that. That's all for this session. See you guys in the next session. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud, and see you in the next session. Take care. Bye. Yes, everyone. So we will have a quick and comprehensive revision of the third unit, which is going to be target costing. So we have finished the entire unit. Quickly a rocket revision for you guys. Now firstly, target costing. What is target costing? Yes, it is the, what is happening to the screen? Yes, everyone. So there are going to be altogether two approaches. One is the traditional approach, wherein what we will do, first we will come up with the product design. We will calculate the cost, say 10 rupees. We will add our profit, say 5 rupees. We will arrive at our selling price, 15 rupees. Now we will sell goods at 15 rupees. It used to work in the seller's market. Now majorly every business is operating in buyer's market. Buyers have options. That means we have to go for the reverse mechanism. Target costing is a reverse of the normal cost plus profit margin. Here what we are doing, first point is not how much is my cost. First point is how much customer will pay, selling price. Suppose selling price is 10 rupees. Okay. In this, how much profit I want? Say for example 2 rupees. That means at what cost I should be producing? 10 minus 2, 8 rupees I should be producing. Now we will try to come up with a product design in such a way that we actually produce at 8 rupees. Now assume we come up with the first prototype wherein the cost is 10 rupees. Tell me what was my target cost? 8. What is my actual cost? 10. That means what is my cost reduction target? 2 rupees I should try to reduce my cost. Is this clear, everyone? Perfect. It is going to be opposite of cost plus margin method. Okay, great, boss. Now, then we have told it is a market driven system for cost reduction. Okay. Now, then we have gone into the different types of questions. First type of question was a basic question wherein they will either be asking us to calculate target cost or target selling price. Tell me students, how do I get selling price? Cost plus profit gives me selling price. How do I arrive at cost? Yes, it is selling price minus profit gives me my cost. Perfect. But one simple pointer I have told, whenever we are doing the calculation, to eliminate the chance of committing mistakes, always do it on per unit as well as total 2 columns. Okay, sir. Next is going to be type 2 question, wherein question is asking calculation of target selling price where competitor is incurring some specific cost which we are not incurring. Yes, XYZ is paper mill, ABC is a competing paper mill, all those things were there. We have solved the question in 3 different steps. Step number 1 was calculation of target selling price. We will see what is the competitor selling price. From that we will reduce what all are the specific expenses which only my competitor is incurring but we are not incurring. We will arrive at our target selling price. My competitor is selling at 30,000, but in that he is also providing freight of 600 which we are not doing. That means effectively, I can be charging 29,400 only because this freight thing I am not doing now. So it is competitor selling price minus the expenses which only competitor is incurring. I will arrive at my target selling price. Step 2, we will arrive at our target cost, which is target selling price minus desired profit. Okay, question had also asked me calculate the target manufacturing cost. Total target cost I got 100 rupees. Assume in that post manufacturing expenses was 40 rupees. That means to manufacture, what is the target manufacturing cost? 60 rupees. Target cost minus my post manufacturing expenses. Yes or no, everyone? Perfect, boss. Yes. So type 3 question was calculation of labor hours to achieve desired profit. Here what is happening? One existing budget company will prepare. They will be having one existing profit. Board of directors did not like that profit. They want a higher profit. So they will revise the data. They are telling after doing all these things, tell me ideally in how much hours I should produce 1 unit. One very important point we should remember is my variable overhead is dependent on labor hours. If you see the hours will be same, that means if labor hours will change, accordingly this will also change. Yes, how do we solve? Simplest thing in the world, whenever you are stuck in the world, whom you have to go to? Your X. Now who is missing in the question? Labor hours. We will assume labor hours per unit is equal to X, point number 1. Yes, point number 2, we will write down the basic data. What all? Selling price per unit is how much, number of units sold is how much, fixed cost is how much, variable cost per unit is how much. Variable cost per unit, direct material will be given. Direct labor per hour I know, into number of hours I will take it as X, accordingly I will get. Variable overhead per hour I know, into number of hours I will be taking it as X. I will arrive at the variable cost per unit. Now drop a marginal cost sheet, calculate. You will be getting a value in terms of X, equate it to the profit. You will be getting the value of X, that is going to be your target labor hours per unit. Yes or no, everyone? Perfect. Then we had the type 4 question, wherein we had to calculate the number of supervisors to be removed. For that, 2 tricky adjustments were there. We had discussed that on a standalone basis. First one was calculation of benefit due to improvement in labor productivity. Assume right now I am paying 40 lakh rupees, but because of a new machine, there is a 10% improvement in the labor productivity. How much cost I can save? Do not do 40 lakh into 10%. You are committing a mistake. Aram se. Yes, assume right now I am producing 1 unit for which I am paying 40 lakh. Tell me if my productivity gets improved means in the same time how much units I will produce? 1 plus 10%. 1.1 unit I will produce. For that my cost will be 40 lakh. That means for 1 unit my cost will be how much? 40 lakh divided by 1.1. It is 36.36 lakh. Right now the cost is 40, in future it will be 36.36 lakh. That gives me the cost savings. Yes or no, everyone? Perfect. The next adjustment was calculation of benefit due to purchase of new machine. What was the story? They were telling I am having an existing machine whose book value is 3 lakh, but my supplier took it back for 1 lakh only. Yes, in that place I purchased the new machine of 10 lakh. So what all impacts are going to happen? Point number 1. The day I sold my machine, I incurred a loss of 2 lakh on sale. Point number 1. Happy or sad? Sad, because it is loss. Point number 2. Yes, I will be incurring the additional depreciation because I have purchased the new machine. Existing machine was having 3 lakh book value, on that I would have charged depreciation, but new machine on 10 lakh I will be charging depreciation, that additional depreciation. Tell me, depreciation is revenue or cost? Cost. Extra cost, good or bad? Bad. Happy or sad? Sad. So it is again going to be a loss for me. Third thing which question had given was that, yes, existing machine, I am incurring maintenance cost of 1 lakh. In the new machine, it will not be there. It is going to be a benefit for me. And the fourth and the final point is the finance cost. Tell me, existing machine I sold for 1 lakh. New machine I should be getting for 10 lakh. Yes, that means extra how much cash I want? 9 lakh. Is this a cost? No, sir, it is an investment. Only depreciation is cost. But on my investment, I would require my return on investment, finance charges. Which question had told 15%. So ideally, logically, I should have done 9 lakh into 15%, but institute has done full 10 lakh into 15%. Is this clear, everyone? Perfect. These were two important crux adjustments. Now, based on that, if you have to just have a look at the question, what were the steps we had taken to solve the question? Look at the students. Which question was it? I guess it was this question. Okay. First step we did was we calculated the target cost as well as the cost reduction target. If you guys can go back to question number 9, their question told right now I am selling at 100 rupees 200 units, but my selling price will reduce by 3%. But still I want the same profit. That means my cost should also reduce by that amount. So I arrived at my cost reduction target telling that 6 lakh I should reduce. Then question has come up with certain changes. Because of that, how much cost I reduced or how much benefit I got, I can calculate. Step number 2. Yes, one column I will write down all benefits, one column I will write down all the cost. I will arrive at the net benefit of 3.59 lakh. Here those two adjustments were important. So total how much cost I should reduce? 6 lakh. Already by doing these changes, how much cost I reduced? 3.59 lakh. That means how much more cost I should reduce? Balance 2.41 lakh. Step 3, I will calculate how much more cost has to be reduced. Question is telling how do we do that? By eliminating some supervisor. One supervisor if I eliminate means I can save 1.5 lakh cost. I want to save 2.41 lakh. That means 2.41 divided by 1.5, 1.6 supervisors. I cannot eliminate 0.6. That means I will be eliminating 2 supervisors. Is this clear, everyone? Perfect. So this is also over. Then we had seen question number 11 wherein there were some mistakes in the question in their calculation. That is something you guys can refer it yourself. And yes, one beautiful point there because of which I have done this is this calculation of maximum investment that I can be doing. Question told that boss, I want a 16% return on my investment. Okay, total how much profit I will be getting? 16 lakh. That means how much investment I should be putting. Two ways. One way is a simple cross multiplication. I can tell if I invest 1 rupee in business, 16%, 0.16, I want it as profit. That means if I get 16 lakh as profit, how much I can invest? 16 lakh divided by 0.16. Or else you can go back to your formula of return on investment. It is return divided by investment. Yes, I am getting 16 lakh return. Yes, it should be how much? 16%. That means how much I should be investing. That way also you will be getting. Is this clear, everyone? The final point which we had discussed was whenever question gives me my fixed cost on per unit basis, the level at which they gave the per unit cost, at that level only I will convert into total cost. I keep it at total fixed cost as constant. Is this clear, everyone? That's all for this chapter. So we finished unit number 3, which is going to be target costing. I hope you guys have thoroughly enjoyed the learning experience. So go back home, revise once by yourselves, create a summary chart for concepts, solve all the questions again by yourselves. Whatever tricky, confusing adjustments are there, make a note of that, and then we'll take our journey forward to the next unit. That's all for this session. See you guys in the next session. Until then, keep studying, keep working hard, keep making your parents proud, and see you in the next session. Take care. Bye. With this, the chapter is over. We will quickly revise. There is nothing per se as such. Yes, unit 4, life cycle costing. It is telling that, boss, whenever you are doing the calculations of a revenue, cost, profit, do not take a decision based on the calculations you do for a year. Instead, calculate the impact of your strategy of your product for the entire life cycle of the product. We should come up with the strategies which will maximize the profit across the life cycle of the product. For that purpose, what we should do? Revenue we should calculate for the full life cycle. Cost we should calculate for the full life cycle. Accordingly, profit also we should be getting for the full life cycle. So how will I be preparing a statement? I will write down the life cycle revenue minus life cycle cost. I will be arriving at my life cycle operating income. Perfect. There are going to be 4 phases in a product life cycle: introduction, growth, maturity, decline. Yes, 2 additional phases are there. Before I launch my product, yes, there is a development phase. After decline, there is an extension phase as well. Okay, boss. We are having only one type of question wherein they are going to ask us to prepare life cycle operating income. Life cycle revenue minus life cycle cost gives me my life cycle operating income. Perfect. Special pointers, 2 pointers are there. Point number 1 is calculation of non-unit level variable cost, that is batch level. Suppose question is telling me that throughout my life cycle, now we are producing 1 lakh watches. Yes, variable cost for one batch is 100 rupees and we are producing 250 watches in a batch. We'll have to calculate the cost. I will tell boss simple. Yes, tell me one batch means it is 250 watches. I want to produce total how many watches? 1 lakh watches. That means how many batches are needed? 1 lakh divided by 250, it is going to be 400 batches. Step 1. Step 2, for one batch the cost is 100 rupees. That means for 400 batch the cost is how much? You will be arriving at 40,000. Or else in a single step also you can do. I can tell one batch means I produce 250 watches, and for one batch my cost is 100 rupees. It is as good as telling for 250 watches my cost is 100 rupees. That means for 1 lakh how much? It is 1 lakh into 100 divided by 250. I will be getting my answer. That is one adjustment. Yes, there was one more adjustment here. Which was that adjustment? That was replacement part. Look at this, students. Altogether we have to produce 80,000 units. Regarding the warranty replacement, question is telling 5 replacement part per 25 units sold at the rate of 10 per part. That means what is it telling? If I sell 25 units, if I sell how much part I should replace? 5 part I should replace. To replace one part, how much is the cost? 10 rupees. That means for 5 part, how much is the cost? 50 rupees. So I will tell for 25 units my cost is 50. That means for 80,000 units my cost is how much? Cross multiplication. You will be getting, I guess, 1,60,000. Yes or no, everyone? That's all for this chapter. With this we have finished unit number 4 as well. We have solved the questions as well. So go back home, try these questions yourselves, prepare a summary note. With that, yes, almost 4 units are done. We'll go ahead, continue our discussion in the next unit. Now it is time for us to revise and wind up the session. Asset life cycle costing. Which asset should I purchase? 2 different types of questions are there. Type 1 question is asking which asset should I purchase. Type 2 question is asking when should I purchase. Okay, which asset should I purchase? Simple one-liner. Purchase that asset whose EAC, equivalent annual cost, is lowest. Sir, how do we do? Question would have given you all the cash flows from an asset. Calculate the present value of all cash outflows. Okay, sir. Now, once you have calculated present value of all cash outflows, step 2, we will be calculating equivalent annual cost. Equivalent annual cost is present value of all cash outflows divided by present value annuity factor. What is the field it is giving me? Yes, this is nothing but total cost. This is nothing but number of years. I will be getting the yearly cost, but this is in terms of present value. This also is in terms of present value. Okay, yes, now I have different assets, different EAC is their equivalent annual cost. Which asset should I purchase? Tell me, I am purchasing asset, cost that I am paying should be more or should be less? Less. So I will purchase that asset whose EAC is lowest. Over. Then comes my type 2 question, when should I buy? Now what is happening? There is an existing machine that I have. To use it further, now 2 costs I am incurring. One is maintenance cost, one more is the opportunity cost, that is a scrap value gets reduced. As against that, there is a new asset that I can purchase. Which one I should go? Again, I will calculate EAC only, but this time for existing machine, now the calculation of EAC is different. I want to know for every year, if I use it for 1 more year, how much more? 1 more year, how much more? So what is the framework? Step 1, I will tell if I purchase a new asset, every year how much cost I am incurring. I will calculate the EAC of the new asset. Okay. Step 2, I have to calculate the EAC of the existing machine. Existing machine, what is the EAC? 2 costs are there. What all? Maintenance, opportunity cost of scrap. I want everything on present value basis. Yes, first I will calculate the present value of maintenance. Simple, simple. Next, I want to calculate the present value of the opportunity cost of scrap. That is what I have sacrificed. How will I do? Simple. We will draw a line. Line should always be straight. 0, 1, 2, 3, 4. Yes, I will write down what is going to be the scrap value. Yes, I will now write down the present value of scrap. In present value terms, I will write. Suppose random numbers I am getting 100, 70, 60, 40, 0. That means, yes, to calculate the opportunity cost, step 1 I will write down the scrap value, step 2 I will write down the present value. Yes, step 3, yes, last year present value minus current year present value is the present value sacrificed. That is, if I would have sold at P is equal to 0, I would have got 100. But because I sold at first year, I got 70 only. That means 30 rupees is my loss, cost, opportunity cost, the value of the sacrifice. Suppose here to here, 70 to 60, 10 rupees I sacrifice. 60 to 40, 20 I sacrifice. 40 to 0, 40 I sacrifice. Simple. Look at this. EAC of existing machine. Firstly, I want on present value terms. Present value of maintenance, whatever cost is there, you take a present value. And next, opportunity cost of scrap. How will you do it? It is last year present value minus current year present value. Last year if I would have sold means this much I would have got. But because I sold this year, this much only I am getting. That means this much I sacrifice. You add, you will be getting EAC of the existing machine for every year. Decision making. So long as my EAC of new machine is greater, that is new machine is costly, what I will do, will I go for new machine? No sir, I will continue with existing machine. But the day my EAC of new machine is lower than that of existing machine, it is existing machine is costly, new machine is cheaper, what will I tell boss? It is now time for us to go for the new machine. Is this clear everyone? Yes, unit number 5 is over. Yes everyone, so now it is time for us to revise, have a quick rocket revision of unit number 6, transfer pricing. Yes, one of the most interesting units. Tell to yourselves, it is interesting. We have made it simple. Tell to yourself, yes boss, we have made it simple. So, pricing can be bifurcated into two. If I am selling to an external customer, the price is called what? Selling price. If I am making a sale or a transfer to an internal customer, the price is called what? Transfer price. So, what is transfer price? When goods or services are transferred from one division of an organization to other division of the same organization, then the price at which this transfer has taken place is called as the transfer price. The division which is transferring the goods, selling the goods, is called transferor. Supplying, selling division. The division which is receiving the goods is called transferee. Receiving, buying division. The price is called transfer price. Okay, other miscellaneous points. Profit for company as a whole. Yes, we will do the calculation for every division. Yes, transferor, how much is a profit? Transferee, how much is a profit? We add the two, we will arrive at profit for company as a whole. Okay boss. Yes, the next point was impact of change in the transfer price. Transfer price is just a notional amount. Yes, for one division it is going to be revenue, for other division it is going to be cost. Net impact is going to be 0. That means whether I increase my transfer price, reduce my transfer price, keep it 0. Company's profit as a whole will not be impacted. Is this clear? Yes sir. Then comes the problem of goal congruence. Now, divisions would always want to maximize their divisional profit. Transferor is selling, that means ideally what he wants transfer price to be? Maximum. Transferee is buying, that means ideally what he wants transfer price to be? Minimum. Transferor wants transfer price to be more, transferee wants transfer price to be less. So, yes, there is a problem of goal congruence. Goals are not congruent. So, sometimes divisions may be taking a decision which is not in the best interest of organization. In such a case, company has to intervene and ensure that ultimately decisions taken are in the best interest of organization. Next point is selling and distribution expenses. Generally, in case of internal transfer, selling and distribution expenses is not incurred. Okay, everyone. Perfect. Now, based on that, we have the different methods of transfer pricing. We have bifurcated into 4 different categories. Category 1, cost based method. In that, first we have marginal cost, we transfer at marginal cost. Second, we have full cost, we are transferring at full cost, total cost. Yes, but in both the places, we are not having an incentive to reduce our cost. So, we have the third method, which is a standard cost. Here, I will transfer not at actual cost, but at the standard cost. Ideally, what should be the cost? The difference between standard and actual cost, it will be, yes, directly, yes, debited or credited, yes, in the books of accounts of transfer. Is this clear, everyone? Fourth one is cost plus markup. Normally, here we will be charging a markup. Yes or no, the markup can be based on cost, it can be based on selling price, it can be based on the capital employed, etc., etc. Using this, we had seen the first 3 questions, practical questions, wherein profit was charged using my capital employed. Yes, beautiful questions were there. Yes, next comes category 2, market price. I am transferring at market price. Third one is negotiation based transfer price, we will discuss later. Fourth one is miscellaneous areas. In the miscellaneous areas, first one we are having is shared profit relative to total cost. Here we are going to share the profit. In which ratio? In the ratio of total cost. That means what are the steps to be followed? Step 1, I will calculate the total cost for every division as well as company as a whole. In this, transfer price should not be included. From company, how much money is going, that only I want to see. Step 2, I will be calculating the profit for company. How do I arrive at profit for the company? It is the total revenue for the company minus total cost that I have calculated. I will arrive at the total profit for the company. Now tell me, how do I distribute the profit? In the ratio of total cost. So once I have distributed the profit in the ratio of cost, transfer price is simple. Selling price, it is cost plus profit. So for transferer, how much cost transferer has incurred plus what is the share of profit for transferer, we will arrive at the transfer price. Is this clear, everyone? Okay, sir. Next one is shared contribution relative to variable cost. Here we will share the contribution in which ratio? In the ratio of variable cost. So step number 1, we will calculate variable cost. That is for every division as well as company as a whole. Just a simple point, transfer price we will not be including. Is this clear, everyone? Okay. So step 1 we have calculated this. Step 2, based on that we will calculate the total contribution for company. That is the sale value for company minus the variable cost for company. I will arrive at the total contribution for company. Yes, the total contribution has to be distributed between division. In which ratio? In the ratio of variable cost of the division. So I will arrive at contribution for every division. Now I will arrive at the transfer price. Tell me, students, sales minus variable cost is contribution. So can I tell sales is equal to variable cost plus contribution. So transfer price for the transferer, it is a variable cost for transferer. How much variable cost I paid plus what is the share of contribution for the transferer. Is this clear, everyone? Okay, perfect. The final thing we had was a residual income method. Yes, what is a residual income? It is the extra income. Suppose I earned 100 rupees income, that is sales minus variable cost, contribution minus fixed cost is profit. 100 rupees I earned. Yes, in that now the minimum income that I want is say 40 rupees. Say for example, yes, 1000 rupees we have invested in business, 4%, 40 rupees, bare minimum profit I want. That means extra how much we earned. 100 I earned, in that 40 bare minimum I want, that means extra 60 rupees income I earned. That is going to be my residual income. Residual income is nothing but my operating income minus the minimum required income. Now question will ask me that, boss, I am selling some units outside. Some units I am transferring internally. Yes, at what price I should make internal transfer so that I achieve a desired residual income. That means internal transfer price I don't know. What will I assume? I will assume transfer price as X. So accordingly, step number 1, we will assume transfer price per unit is as X. Accordingly, we will prepare a statement calculating residual income, external sale, internal transfer total, total sale, variable cost, contribution minus fixed cost, profit. Yes, we will get the profit. From that, we will reduce the minimum return. We will arrive at our residual income in terms of X. Now substitute, you will arrive at the value of X. Is this clear, everyone? Perfect. So concept number 2 is over. Next comes concept number 3, one of the most beautiful concepts. It is transfer pricing range and the concept of goal congruence. Now tell me, students, whenever a transfer is happening, transferer, transferee enter into a negotiation. Transferer is selling. That means ideally what he wants transfer price to be more. Will he put any restriction on the maximum? No. How much ever more it goes, it is good. That means what is the restriction transferer will be putting on the minimum transfer price? This much at least I want. Yes or no, everyone? Transferee is buying. When he is buying, ideally what he wants transfer price to be? Lowest. Will he put any restriction on how low it can go? Even if he gets it for free, he will go it. But what is the restriction he will put? Maximum this much only I can pay. Yes or no? So my transfer pricing range is minimum transfer price to maximum transfer price. Minimum transfer price is from the perspective of transferer. Maximum is from the perspective of transferee. Transferer is telling if I will have to make a transfer, bare minimum this much at least I have to get. Transferee is telling maximum this much only I can pay. Okay, boss. What is the minimum transfer price for the transferer? It is a marginal cost. Yes or no, everyone? In order to make a transfer, I will be incurring some cost. That at least I have to recover. What all will be there in my marginal cost? It is variable cost plus specific fixed cost plus opportunity cost, if any. Okay, what is the maximum amount transferee is willing to pay? Maximum amount buyer is willing to pay. It is lower of the two. What are those two things, students? Yes, it is external buy-in cost or net marginal revenue, whichever is lower. Firstly, external buy-in cost, what is it? It is the external purchase price plus or minus modification. Suppose from outside I can buy a component at 100 rupees. For that I should do 10 rupees modification. That means total how much I am paying? 110. Here also maximum 110 I can pay. Yes or no, everyone? What is net marginal revenue? It is a net cash that I am getting. That is, okay boss, I got this component. On this what I will do? I will incur further processing cost or other variable cost. Say for example, assume 100 rupees.
and by doing that I will sell the product and get the final selling price of say 400. That means tell me net how much cash I am getting. 300. Yes or no? I am telling okay boss, this component I got in transfer. Yes, by getting this component, what I will do? I will produce it further. So how much extra cost I am incurring? 100. By incurring 100, finished goods is ready. If I sell, how much I will get? 400. That means tell me net how much cash is there with me? 300. That means maximum how much I can pay for this transfer? 300. How much cash I am having, that only I can pay. Yes or no, everyone? Yes, it is going to be whichever is lower. Say for example, outside I am getting at 100 rupees. I am having 300 cash. Tell me, will I be willing to pay 300? No boss, outside supplier is giving to me at 100 rupees. I want either you give it to me at 100 rupees or else I will buy from outside at 100 rupees. Or option number 2, external buying cost is 100 rupees. Yes, the net marginal revenue is 80 only. That is by producing this into finished goods, net cash I will get is 80 only. Even the outside supplier gives it to me at 100 rupees. Will I buy at 100? No. If I can get it 100, I will get it at, if I can get it at 80, I will get it at 80, I will produce and sell. Or else I will sit silent. I will not get into the business only. I don't want to be making a loss. So it is going to be whichever is lower. Is this clear, everyone? External buy-in cost or net marginal revenue, whichever is lower. Okay, perfect. Yes, other miscellaneous points. Yes, decision making matrix. If transfer pricing range exists, that means ideally for company, transfer should happen. If transfer pricing range does not exist, that is 135 to 130, one example. Yes, that means transfer pricing range does not exist. That means whether transfer should happen, it should not happen. Is this clear, everyone? Then we have told a shortcut formula to calculate profit. Yes, I can calculate profit in one single step. It is maximum transfer price minus minimum transfer price into number of units transferred. Now, whether it is profit or not, that we have to think. Aram se two situations can be there. If transfer pricing range exists, that means tell me ideally transfer should happen. Yes, transfer should happen. In reality also transfer has happened. Goals are congruent. Tell me it is profit. Transfer pricing range exists. That means ideally transfer should happen. But in reality we did not do transfer. Goals are not congruent. That means it is loss. Okay, transfer pricing range does not exist. That means in reality transfer should not happen. Yes or no, everyone? Company is telling transfer should not happen. In reality, divisions also did not make the transfer. Tell me good or bad? Good, it is profit. Company is also telling don't do transfer. In reality also we did not do transfer. That means both goals are aligned, goals are congruent. That means it is profit for me. Okay, transfer pricing range does not exist. That means yes, ideally transfer should not happen. But in reality we still did the transfer. Goals are not congruent. That means it is going to be loss for me. Yes or no, everyone? And how much is going to be the profit or loss? Simple. It is maximum transfer price minus minimum transfer price into number of units transferred. One additional point we had discussed, that is the impact of spare capacity on transfer price. Who is having spare capacity? Transferor. So whether he is producing goods out of spare capacity or out of the normal units in which he is sacrificing some external sale, that will determine the minimum transfer price. Because if he is producing in spare capacity means no opportunity cost. Otherwise there is opportunity cost. So for transferor, spare capacity will make an impact. For transferee, everything is same only. So it will not be making an impact. Okay, boss. Concept of goal congruence we have told. All formats at one place. How are we going to calculate profit or loss for company as a whole? First, I will write transferor, transferee. In transferor, most of the times, external sale, internal transfer, total. So first, I will write down the revenue. In case of external sale, it is called as sales. Internal transfer, it is called as transfer price. Minus variable cost, I will be doing. Yes, in that I will be having the other variable cost as well as for transferee. Transfer price is also going to be cost. We will arrive at the contribution. From that we reduce fixed cost. We will arrive at the profit. Now how do we calculate profit for company as a whole? Transferor profit plus transferee profit. Okay. If you have to calculate residual income, directly from my profit, I will reduce the minimum required profit. I will arrive at the residual income. Is this clear, everyone? Okay, perfect. Then we have told calculation of maximum transfer price in case of bulk transportation. If you guys can recollect that example, yes, assume from outside supplier will give me every unit at 22 rupees per unit. Yes, total 50,000 units is needed. Yes or no? In addition to that, if I am purchasing from outside, bulk transportation cost of 1.5 lakh I have to pay. Yes, assume situation number 1, full 50,000 units we are making internal transfer. That means what all I save, this 22 rupees per unit also I save, 1.5 lakh also I save. Yes or no? That means total 22 per unit into 50,000 plus 1,50,000 will be the total benefit. That much maximum I am willing to pay to my transferor. Second situation, transferor is telling I will give 10,000 units only. Now tell me, if transferor is giving 10,000 only, still how much units he has to buy from outside? 40,000 units he has to buy from outside. That means how much he has to pay? 40,000 units into 22. Is this the only cost? No, sir. In addition to this, 1.5 lakh still he has to pay bulk transportation. For any quantity, bulk transportation is incurred, is what the question had told. That means tell me effectively how much benefit only I am having. Yes, sir. Previously on 50,000 units I was paying 22. Now only on 40,000 units I am paying 22. That means on 10,000 units, 22 rupees is my benefit. This I will not be getting a benefit. Is this clear, everyone? Yes, a simple substance is, if entire units we are making internal transfer, then bulk transportation cost can be saved. Otherwise, bulk transportation cost cannot be saved. Is this clear, everyone? Okay, perfect. Next thing is, yes, transfer pricing. If transfer units are decided by one division, we had seen question number 13. Transferee is telling, I will decide how much units I want. So how will transferee decide? Yes, how will that one division decide? Yes, this division will see at which level its profit is maximum. At that level only it will make an internal transfer. Yes or no, everyone? Okay, perfect. Then the final thing was transfer pricing in case of limiting factor. Now we want to calculate the minimum transfer price. In that three components are there: variable cost, specific fixed cost, opportunity cost. This opportunity cost, if I am producing one component only, then it is very simple. But if transferor is producing multiple component, from that, if I am having a limiting factor, how do I calculate opportunity cost? Simple steps to be followed. Yes, step number 1, check if the factor is a limiting factor. Normally this in questions I need not be doing. If it is limiting factor only, question will be giving me. Okay. Next step, transferor is producing 2-3 different products X, Y, Z. Yes, we will calculate contribution per unit, contribution per limiting factor, as well as give the ranking. Okay, sir, contribution per unit, contribution per limiting factor, give the ranking. Now based on that, yes, I have to calculate opportunity cost. How do I calculate? Yes, first I will see what is my product mix and contribution, assuming there is no internal transfer. I am telling boss, internal transfer is not there only. How much I could have sold, how much contribution I could have done. Next step, now I will calculate the product mix as well as contribution. If internal transfer is there, that means out of my total resource, first internal transfer I will do, balance resources only outside I will sell. So now how much contribution I am getting from external sale? Assume previously 9 lakh contribution I am getting, now 6 lakh only I am getting. That means this 3 lakh contribution is sacrificed. Why? Because of internal transfer. Yes, that gives me the opportunity cost. The difference in contribution is the opportunity cost. Using that, calculate the minimum transfer price, which is variable cost, specific fixed cost, opportunity cost. Is this clear, everyone? Yes or no? Yes or no? Yes or no? With this, we have finished the revision of the chapter transfer pricing as well. So go back home, revise, recollect, prepare a summary of the questions, and every once in a while, when you feel that you guys are forgetting this, keep listening to this revision. It will be uploaded as an audio revision as well as on YouTube as unlisted revision. That's all for this session, my dear students. See you guys in the next session. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud, and see you in the next session. Take care. Bye. Quickly revise whatever we have discussed. Pay attention, students. Unit number 8, decision making using probability. Here, whatever decisions of marginal costing we had taken, it was based on some data. My variable cost per unit, total fixed cost, number of units, selling price. If it is certain, there is no problem, but there is a slight hint of uncertainty. So whenever multiple events can occur, we have to bring in the factor of probability and calculate the expected value. How do we calculate the expected value? It is a probability into value. We take a summation, that is going to be expected value. So based on that, we solve the initial few set of questions. Okay. Then we had a type 2 question, wherein question was asking me, yes, calculate the probability of achieving BEP or probability of achieving a profit of 10,000, etc., etc. Question was asking. To show you guys a very simple example, where was it? Example number 1. Look at this. Question told selling price is going to be, where did it go? Okay. Question told selling price is going to be 6 rupees, variable cost is 3.5. That means contribution is 2.5, fixed cost is 30,000. But the number of units, it can be 10,000 also, 40% chance, 12,500 also, 15,000 also. Question is asking what is the probability that we will achieve BEP or achieve a profit of 5,000. What are the steps to be followed? Yes, one of the two approaches we can do. One is a lengthy approach but without applying your brain. What? In each of these cases, I will calculate profit. Then I will tell based on that in how many cases I am achieving BEP, that probability, in how many cases I am achieving 5,000 profit, that probability. Or one more is a bit more logical approach, wherein what we are doing, I know selling price is 6, variable cost is 3.5, that is contribution is 2.5, fixed cost is 30,000. First one question is asking is to achieve BEP. I will see how many units should be sold to achieve BEP. Yes, I understood 12,000 units should be sold. That means tell me students, I draw a line. 10,000 units means probability is 0.4. Yes, 12.5 means it is 0.3. 15,000 units means 0.3. In order to reach BEP, how many units I should be selling? 12,000 units. That means in this case will I reach BEP? No. In this case will I reach BEP? Yes. In this case also will I reach BEP? That means I want either 12,500 units or 15,000 units. It is 0.3 plus 0.3, it is going to be 0.6. Same is the case for achieving a profit of 5,000 rupees. I will see how many units to be sold, 14,000. Now I will tell 14,000 I have to sell. That means here and here I will not achieve, only in this case I will be achieving. Is this clear everyone? On similar lines we had one more question wherein fixed cost was given. Just remember, number of units more is less, fixed cost less is going to be good. So if you are having confusion, forget, in each of the cases calculate profit, accordingly come up with your comment. Okay boss, then the final thing we had discussed was, yes, statistically independent distribution table. There we have understood the concept of path. Yes, what all things can happen, based on that how do we create a path. So in the question altogether 3 factors will be there. One is variable cost per unit, one more is going to be demand, one more is going to be fixed cost. Question will tell all 3 are statistically independent, that means anything can happen. But the institute, while they are solving the question, fixed cost they will not assume to be statistically independent. For fixed cost what they are going to do, they will calculate the expected value, that is what all fixed cost can happen, what is the probability, they will take a summation and arrive at the expected fixed cost. That means the only things they will be taking as statistically independent is this variable cost as well as demand. So for this what we have to do, step number 1, come up with a path chart. Yes or no? Draw this path and calculate the joint probability. What is joint probability? It is probability into probability. Yes or no? My demand is 45,000 units and my variable cost is 7. This into this, you come up with this. Okay, once you have come up with the path, yes, now what you will have to do? For each path, you will write down what is happening. My demand is, say for example 50,000 units and variable cost is 7 per unit. Yes, in each of the path, yes, you will write down the joint probability. Yes, next you will write down contribution per unit. Assume selling price is 13.5, variable cost is 7, you told 6.5. Yes, you write down the total contribution, which is contribution per unit into number of units. Yes, you write down the profit, which is total contribution minus expected fixed cost. Okay, you got. Question is asking what is the probability of achieving BEP. You will see if it is negative means I am not achieving, every other case is positive means I am achieving. You add the joint probability, you will arrive at the probability of achieving BEP. Is this clear everyone? That's all for this session my dear students. So with this we have finished 8 units and now we will continue our discussion in the next session and start with the next unit, one of the most beautiful awaited units, unit number 9, decision making involving alternate choices. We will see that in the next session. Until then, revise whatever we have discussed and see you guys in the next session. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud, and see you in the next session. Take care. Bye. Let us quickly revise whatever we have discussed in this unit. Pay attention students. So this is going to be unit number 9, which is decision involving alternate choices. In that the first decision we have taken is the optimum product mix or limiting factor decision. So we know that what is a limiting factor? Any factor which is in short supply. How do we take a decision when we have a limiting factor? Based on contribution per limiting factor. Now what all different options could be available? Either I am telling I am producing only one product. If you are producing one product, which product I should produce? Produce that product whose total contribution is maximum. Total contribution is contribution per unit into number of units. How do I get number of units? It is my demand or production capacity, whichever is lower. Okay, I am telling no boss, I am producing multiple products. You just tell me the order, product mix. I am asking how many limiting factors you are having. Single limiting factor, multiple limiting factor. If you are having multiple limiting factor, whether rank as per all the limiting factor is same or whether rank as per all the limiting factor is different. Either you are having one limiting factor or multiple limiting factor but rank is same, no problem. You will calculate, take a decision using contribution per limiting factor. But if you are having multiple limiting factor plus ranking as per every limiting factor is different, you have to go for LPP. LPP in QT you will learn. Now, how to take a decision using contribution per limiting factor? Step 1, check if the resource is a limiting factor. Yes, in examination not needed to do. Yes, you will calculate contribution per unit, contribution per limiting factor, that is contribution per unit divided by limiting factor per unit. Yes, based on that you will be getting a rank. Yes or no everyone? Using the rank you will allocate the resources. But a very important note is, if there is a minimum demand to be fulfilled, first we will fulfill minimum demand, then we will allocate using the rank. Is this clear everyone? Yes, the next thing we told was, if there is multiple limiting factor but same rank, while I am allocating, I should draw multiple columns depending on how many resources are there, because I should parallelly keep checking, whether every resource, how much is spent, how much is pending, how much is available. Accordingly, I will be taking a decision. Is this clear everyone? Perfect. So this is what we have done. Yes. Now, in that, two main tweaks were there, which we have understood in the form of adjustments. Yes, one thing is which all key factors and what is going to be their decision parameter. Yes, if it is raw material means contribution per kg, labor hours means per hour, machine hour means per machine hour, yes or no. If land means it is contribution per acre or contribution per hectare. If sale in terms of units means it is per unit, in terms of rupees means per rupee, which is nothing but my PV ratio. Yes, so two adjustments only we had in this entire chapter, all the questions. First one is, question has told me the unit cost, that is total cost is 18, and question gave me a note below telling that the fixed manufacturing overheads are absorbed at 200% of variable cost. That means if my variable cost is 1 rupee, fixed cost will be how much? 200% of that 2 rupees. That means total cost will be how much? 3 rupees. That means variable cost is 1/3, fixed cost is 2/3. Adjustment number 1. Yes, the other adjustment we had seen is rounding off in case of minimum and maximum. In case of minimum, assume question is telling minimum 12.22 hectares at least I should grow, but it cannot be in decimals. That means tell me minimum at least 12.22 I should grow. That means where will I go? Can I go back to 12? Not possible. At least 12.22 I should be growing. That means I will round it up, go to 13. Maximum 65.66 I can grow. That means maximum till here I can grow. Can I go beyond that? No. That means where will I come? I will come back. I will round it downwards to 65 hectares. Okay. We had seen question number 2 where land is a limiting factor. Royal red, juicy golden yellow, juicy crimson, sunny scarlet. Yes or no everyone? Perfect. What are the steps we followed? Step 1, we calculated contribution per hectare and ranking. That is selling price per hectare. Question gave me selling price per ton or something like that, or per box, into number of box it gave. Variable cost also per hectare. Whichever is given directly per hectare, I will rate it. Whichever is given per box, I will convert. I will arrive at contribution per hectare. I gave the ranking. Okay, step 1. Step 2, I calculated the minimum and maximum number of boxes. Yes, in case of minimum means, okay, this much at least I want, I will round it up. Maximum means I will round it down. Okay. Step 3 was allocation. For allocation, I told to draw a box. Total 96 is there. In that 68, I can grow anything. Balance 28 specifically I should see and only grow. Okay, first I will try allocating the minimum demand. Yes or no everyone? Perfect. Where is the drawing? Okay, here it is I guess. First I will try allocating the minimum demand. Yes. Now golden yellow and juicy crimson. Yes, this specific area I can be growing only these crops. That means my minimum demand for golden yellow I can either produce here or here. If a specific area is there where only a specific crop can be grown, their options are limited. So my limiting factor, my minimum demand of that specific crop, first I will fulfill there. Here only I will fulfill. Then balance I will be allocating. Yes, my general crop, yes, for which I cannot be using it here. Obviously there is no option. I will be using it here. Accordingly, I will be doing the ranking as well as allocation. Is this clear everyone? Perfect. Now going ahead, we had seen that if there is an improvement plan carried out, 50,000 loan I am taking at 6% interest. That means 3,000 extra interest I am paying, extra fixed cost. What will happen in that 28 hectare, royal red also I can grow. That means royal red will also be coming there only in the terms of allocation. And then one more impact is golden yellows. Yes, variable cost will be saved by 12.5 per box. That means for 1 unit, my variable cost will reduce by 12.5. That means my contribution will increase by 12.5 per box. I am doing all calculations per hectare. In 1 hectare, I can produce 100 box. That means 12.5 into 100. My contribution will increase by 1250. Accordingly, I will be doing my revised calculation. Is this clear, everyone? Question number 3. The only tweak that was there was, question told me right now I am producing M, N, O and P. How much acres question told? Question told the area available for M and N. Either I can produce M or N. That means that total area I can cultivate only M or N. O and P, I can either produce O or P. That means that is going to be only for O or P. Accordingly, I will be doing my allocation. That's all for this session. With this, we have finished the first unit, a beautiful Maja unit, which is going to be our limiting factor decision or product mix decision. Yes, everyone. So let's have a quick revision of concept number 2, which is make or buy or outsourcing decision. So here what we are deciding, we are manufacturing a product. For that we want a component, a raw material. That component should we manufacture in-house or should we purchase from outside is the decision that we are going to take. Sir, how do we take a decision? Very simple, dear. Yes, I am having two different options. Either I can manufacture in-house or I can purchase. So what will I do? Step number 1, I will calculate the relevant cost of manufacture. If I manufacture the component in-house, how much is the cost? What all cost I will be incurring? 3 costs. Yes, it is nothing but the marginal cost, that is variable cost plus specific fixed cost plus opportunity cost effect. Yes, now step number 2, I will calculate the relevant cost of buying. If I decide to purchase the component from outside, what is the cost I will have to be incurring? Yes, ideally I will have to be paying the purchase cost plus sometimes some associated cost. Now using this, I will take a decision. How do I take a decision? Simple. Yes, I am paying the cost, relevant cost. Assume my relevant cost of manufacturing is cheaper. That means what I will do? I will manufacture. Assume to buy 1 unit, relevant cost is 2. To manufacture 1 unit, the relevant cost is 1.5. So what I will do? The manufactured. But assume the relevant cost of buying is cheaper. It is 2. Manufacturing is 3. Then what I will tell? Purchase. Is this clear, everyone? Perfect. Then came the second type of question. That is make or buy decision only. But I am having a limiting factor. That is, understand, whatever products I want to manufacture in-house, I don't have the sufficient capacity. So now what all products I can manufacture in-house? So what are the steps to be followed? Step 1, I will calculate the relevant cost of manufacture. That is variable cost, specific fixed cost, opportunity cost. Step number 2, I will calculate the relevant cost of purchase. That is purchase plus any associated cost. Step number 3, I will calculate the savings per unit on manufacture. That is, if I manufacture 1 unit, how much I can save? Say the relevant cost of manufacturing is 10. To manufacture 10 rupees I am incurring. Relevant cost of purchase is 15. To purchase 15 I am incurring. That means tell me, students, which is cheaper? Manufacturing is cheaper. If I do manufacturing, how much cost I can save? 5 rupees I can save. That means tell me, is it good for me to produce this component in-house? Yes, boss. So now understand, if my savings per unit on manufacture is negative, that is my buying cost is cheaper. Assume purchase, buying cost is 10 rupees, manufacturing is 20 rupees. Which is cheaper? Buying is cheaper. What is my decision? Straight away close your eyes, purchase that component. Yes, but if your manufacturing cost is cheaper, that is you are having savings per unit due to manufacture, then wait. Ideally you are thinking these components will manufacture in-house. It is beneficial to manufacture in-house, but wait, boss, I don't have the required resource. So my resource is in short supply, limiting factor. So tell me, whenever I have a limiting factor, how do I take a decision? It is going to be based on the benefit per limiting factor. So I have a savings per unit. I will divide it by the limiting factor per unit. I will arrive at the savings per limiting factor. Yes or no, everyone? And how do I calculate the savings per limiting factor? It is a savings per unit divided by limiting factor per unit. Now using that, yes, I will give the ranking. In that ranking, I will try allocating the resources. For which all products I can allocate the resource means that I will manufacture in-house. which all products I cannot allocate the resource. That means that even though I want to produce, I don't have the resource. Because of that, I will purchase. And if savings per unit on manufacture is negative, that is buying cost is cheaper, straight away I will purchase those goods. Is this clear, everyone? Yes or no? Perfect. So accordingly we had done that. Now additional points, special pointers that were discussed. First one was calculation of the additional capacity. Yes, assume question is telling me that yes, right now I am producing say 132 units. Okay boss, or else we'll quickly revise that question only. Pay attention, all questions one by one. Let us try revising, recollecting. We have come to the examples. Okay, in the form of questions only we will try revising. Okay, pay attention. This one was okay. Yes, three options were there. Either I can purchase, or I can go for Super X machine, or I can go for Janta machine. So altogether three options are there. In every option variable cost is there, fixed cost is there. I will calculate total cost at each of the levels, 10,000, 20,000, 40,000, whichever cost is less, I went for that alternative. Okay, simple question it was boss. Question number 3, yes, 3 was a simple one. Fourth question, yes, in order to manufacture a finished goods, 5 raw materials are needed, A, B, C, D, E. That means A plus B plus C plus D plus E gives me a finished goods. Okay boss, in that question told me that A, B and C I am producing using a machine, and this machine is in short supply. Okay, total hours available is 4,752 only, and right now we are operating at full capacity. So first point was right now how many units we are producing. So I told boss, yes, to produce 1 unit finished goods, I have to get A also, B also, C also, D also, E also. In that D and E I am getting using labor, which is not attention. Okay, to produce A, how much hours my machine should work? 10. To produce B, how much hours my machine should work? 14. To produce C, how much hours my machine should work? 12. That means altogether to produce 1 finished goods, how much hours my machine should work? 36 hours. Yes or no, everyone? Perfect. Yes, we are working total 4,752 hours. That means right now how many units we are producing? 132 units. This was one area wherein we can commit a mistake. Okay boss, my current production I have told. Yes, then came the next thing. Question asked me how much additional capacity that I can generate if one of the components I buy from outside. Okay, I tell, wait. 3 options can be possible. Either I will purchase A from outside, or I will purchase B from outside, or I will purchase C from outside. Tell me, if I purchase A from outside, then which all components we have to manufacture in-house? B and C I'll have to manufacture in-house. Okay boss, that means tell me now to produce 1 finished goods, how much hours my machine is taking? To produce B it is taking 14 hours. To produce C it is taking 12 hours. That means for 1 finished goods 26 hours only we are taking. Why? A I am purchasing from outside. Okay boss, for 1 unit 26 hours. So if I am having 4,752 hours means how many units I can produce? Around 182 units I can produce. Okay. Right now how much I was producing? 132. So in future if I am producing 182 means how many units extra I produced? 50 units extra I produced. Yes or no? In terms of percentage, right now I have produced 132. If it has gone to 182 means 50 units extra from where? From 132. So how much percent extra? 50 divided by 132. It is going to be some 37%. Accordingly, I do for all the options. Okay, boss. Then question told me that, boss, my capacity has increased by 50%. My demand has increased by 50%. Right now I was selling 132. In future, if my demand has increased by 50% means I will be selling 198 units. So, in order to fulfill that, you tell me which is the best component that I should purchase. I told boss, if I purchase A from outside, I will never be in a position to produce 198. I will only be in a position to produce 182. So, there is no point in purchasing A from outside. A I have to manufacture in-house. Now, if I purchase B from outside, I can produce 216 units. If I purchase C from outside, I can produce 198 units. That means either I can purchase B from outside or I can purchase C from outside. Yes or no? Which one I should purchase from outside? Which one I should manufacture in-house when I am having the limiting factor? It is based on savings per limiting factor. So how will I be taking a decision? Okay, raw material B is there, C is there. I told if I'm manufacturing in-house, how much is the cost? If I'm purchasing from outside, how much is the cost? So I got how much I can save for 1 unit if I manufacture in-house. Yes or no, everyone? Perfect. But tell me, will I be taking a decision based on savings per unit? No, boss. Savings per limiting factor. So I did it divided by limiting factor per unit. So I understood that, okay, boss. Yes, if I manufacture B in-house, for every 1 machine hour, I will save 7.57. But if I manufacture C in-house, for every hour, I will save 5.5 only. That means, tell me, ideally, yes, which one is giving me a higher benefit for 1 hour if we manufacture in-house? B. That means which one we will manufacture in-house? B. That means which one we will purchase? C. So accordingly I told B I will manufacture in-house, C I will purchase. Yes, in this case what is going to be my profit? I'll have to calculate. That is A I am manufacturing in-house, B also I am manufacturing in-house, C I am purchasing from outside. Yes, the data selling price is going to be same. Units I have told has become 198 units. Yes, my variable cost, understand, C I am purchasing, that means the purchase price I will have to write. Everywhere else the manufacturing cost I will be writing. Okay, fixed cost I will write, I will arrive at the profit and the increase in the profit. Is this clear, everyone? This was one question that we had seen. Yes, the next question that we had seen was EMO. Yes or no? This is the last question that we have solved, right? Yeah, the question that we had solved recently. Simple point. We have produced a new component called EMO. Yes, in this, the first thing I'll have to understand is how do I calculate the cost of the empty tube as well as the cost of the product. Yes, for that let us see this example, pay attention. Yes, question told me that the total cost of a tube is 4.5 and 3. Right now what I am doing is a tube I am manufacturing in-house. That is a tube plus product. Right now the cost is 4.5 and 3, 7.5. Question told me in future if I purchase the empty tube from outside, what happens is my direct material cost will be saved by 20%. My direct material cost will be saved by 20%. That means it will reduce by 20%. That means how much only my material cost will be there? Yes, 4.5 minus 20%, 3.6 only will be there. That means tell me how much cost is saved? 20% cost is saved. Why is this cost saved? Because I did not manufacture the tube. That means this is the cost of the tube. Yes or no, everyone? Simple example. Suppose I am telling right now I am producing product also, tube also. My cost is 100. In future, if I purchase a tube from outside, my cost will be saved by 30%. That means my cost will reduce by 30%. That means how much will be the revised cost? 70. That means how much cost is saved? How much cost is reduced? 30. Why is it reduced? Because I did not manufacture tube in-house. That means this 30 is going to be the cost of the tube. This 70 is going to be the cost of the product. Is this clear, everyone? This was one very important calculation in this question, EMO. Yes. Then we have told, using that basic calculations we did, question had given me the total overhead cost. Yes or no? In that variable was also there, fixed was also there. I bifurcated variable, fixed. Fixed I wanted on total, I had on total. Variable I wanted on per unit, so I will bring it down to per unit. Okay, that was one important adjustment. I calculated my product cost as well as tube cost. I have already explained right now how to do that. Then came the decision making framework. Now understand, students, what is happening. Right now I am standing at 3 lakh capacity. For this I am producing using my spare capacity. To produce this I do not want any extra fixed cost. If I am manufacturing in-house means I will be incurring 1.275. If I am purchasing means I will be incurring 1.35. So what I will tell, any given day I will close my eyes and tell first 3 lakh units I will always manufacture in-house. Beyond this when I am going, if I have to manufacture in-house means I have to incur 30,000 extra fixed cost. As with that 1.275 per unit. If I am purchasing, it is going to be directly 1.35 per unit into number of units. So assume I am producing 3.5 lakh. How will I take a decision? I will first tell boss, existing first 3 lakh, I will always manufacture in-house. But the extra how many units we produce? Extra 50,000 units I produce. These extra 50,000 units, yes, if I purchase directly at the rate of 1.35, I will get 67,500. But if I manufacture in-house, 1.275 into 50,000 plus 30,000 specific fixed cost I will have to incur. That means 93,750. That means what I will tell, this additional units I should purchase. That means if I am producing total 3.5 lakh units, means first 3 lakh I will manufacture in house, extra 50,000 units I will purchase. Is this clear everyone? Then question asked me cost indifference point. Yes, for manufacturing versus purchase, that is a simple calculation we will be doing. Yes, then question told me profit statement. Simple. Yes, 3 lakh tubes, there is absolutely no doubt. Simple. In case of 3.5 lakh tubes, what am I going to do? I will tell first 3 lakh tubes I will manufacture in house. Extra 50,000 tubes I will purchase. So in that, selling price, variable cost. Yes, selling price is same. In variable cost, product cost is same. But the tube cost, if I am manufacturing in house, it is going to be 1.275. If I am purchasing, it is going to be 1.35. Accordingly, I will arrive at contribution per unit. Into units, I will arrive at the total contribution minus fixed cost, I will arrive at the profit. Yes, that is this unit. So we have revised, yes, concept number 2, make or buy versus outsourcing, that is outsourcing decision, understood the concepts also, and had a quick recap of all the questions, the important areas as well. Is this clear everyone? This audio revision we will try uploading on YouTube or on Telegram for your reference. So whenever you feel you will have to revise, or whenever you feel okay you will have to get a quick idea of the question, please listen to this once. Based on that, continue your preparation. That's all for this session. See you guys in the next session. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud, and see you guys. Take care. Bye. Okay, so pay attention. We are discussing unit number 9, which is decision making involving alternate choices. In that, we are in the third concept, which is decisions involving alternate choices, wherein we told multiple alternatives are available. Alternative 1, 2, 3, 4. In that, we have to choose the best option. How do we choose that? If question gives me only cost data, I will calculate the total cost of all the options. Wherever my total cost is minimum, I will go for that alternative. If question gives me revenue as well as cost data, that means I will be doing my evaluation on the basis of profit. I will calculate profit for all the options. In whichever option my total profit is maximum, I will go for that alternative. Is this clear everyone? Okay, perfect. Now using that, some special pointers we had discussed. First one was, whenever data is given in terms of percentage capacity, how do I arrive at my basic data? I will calculate my sales as well as variable cost for 1% capacity. Now using that, we had seen, yes, the first question, which was going to be, yes, evaluation of export order. Here what is happening? Company is currently operating at 80%. We got a new export order at 40%, which has to be executed either at full, that is at some 10% discount, or I have to leave it completely. So they told what all options can be possible. So what I did, firstly basic data. Sales, normal sales I calculated at 1% capacity. Then I told in case of export how much my sale is going to be. Variable cost I calculated at 1% capacity. Yes or no everyone? Then fixed cost I calculated on total. Yes, in these cases, yes, first option was there, second option was there, I can be doing my calculation. Third option was important, wherein we told we will operate at 120% boss. How we will operate? 100% already I am operating. 10% extra I will increase by bringing in a new plant, for which 65,000 extra fixed cost something I'll have to pay. Okay boss. And apart from that, that balance 10% extra that I want now, that I will get by working overtime at 1.5 the normal rate. So in that case, how do I calculate the labor cost? Pay attention, that is going to be important students. Is giving you guys a quick idea, quick recap of this. Yes, what I told boss, I calculated my labor cost for 1%. I got it is 0.03 lakh. That means for the first 100%, basic wage only I am paying. Yes, 0.03 into 100. Yes, additional 10% that I got because of plant. For that I will not be paying overtime. So it is 0.03 into 10. Yes, but this from 110 to 120, this 10% extra I got because of working overtime. So here I will have to be paying 1.5 times the normal rate. Normal rate is 0.03, means here 1.5 times of that I should be paying. That means 0.045 for 1% capacity. That way for 10% capacity I will be paying 0.45. If I add all of this, I will be getting. That was question number 1. Question number 2 was same only. Yes, then we went into third question, which was regarding continue, discontinue business decision. Here one of the most key crux was the bifurcation of factory overheads into variable as well as fixed. So if we read the question specifically, what is the question trying to tell us? Question has told me the factory overheads. Question also told me the under absorption. Yes, and question told me 40% of factory overheads is variable at the normal volume. At the normal volume. Tell me now, are we standing in the normal volume? No, boss, we are not standing in the normal volume. So what I will do? First, I will calculate overheads at the normal volume. I will tell boss, absorbed overheads is there. Under absorption, yes, cost less I have recovered. That means I will have to add it to cost. This 24 I will add it to cost individually to products. In which ratio I will distribute? In the ratio of absorbed overheads. So if I add, I will arrive at the overheads at the normal volume. In this, 40% is variable, balance 60% is going to be fixed. Is this clear, everyone? That is one of the most important crux proposal. And then they have given us 3 options. In each of the options, what is it that we should be doing? Every option, if we analyze accordingly, we will be getting. Now here, in the basic data, it is not possible for us to calculate either on per unit level or for 1% capacity. So yes, the last option that was available for us, sales we calculated, variable cost we bifurcated, contribution we got. Yes, fixed cost we wrote, profit we got. Yes, now for future, if I will have to simplify my calculation, what I will calculate and keep? I calculated my PV ratio, that is contribution divided by sales. So that subsequently when I am doing my calculation, at least using this PV ratio, I can get my answers quick. Is this clear, everyone? Perfect. So each and every option we had evaluated. Yes, question number 3 was also over. Question number 4 was in case of transfer pricing. Yes, in case of transfer pricing, what is happening? Unit alpha is there, unit beta is there. Currently, alpha is transferring 20,000 units to beta. And in beta, what is happening is, for one finished goods beta, I want 2 units of raw material. That means, tell me, when I am transferring 20,000 units to beta, how much finished goods is getting produced? 10,000 finished goods is getting produced. That calculation is very important. How much finished goods? Point number 1. And transfer is profit calculation. Sale minus variable cost. In that component cost, yes, if it is 210 per unit, when it is purchasing from outside, that is for one component. I want 210 into 2. Other variable cost gives me contribution, minus fixed cost gives me profit. That is one very important point. Yes, the next thing was that, yes, facility at alpha can be rented out at 3 lakh per annum. If you are not working on alpha, we can, yes, rent out that facility and earn 3 lakh rupees. In that case, 3 lakh directly I will write in the profit column. Yes, we are assuming that the entire fixed cost is avoidable, so I will not be incurring that. They have given us 3 options. Yes, every option we will analyze and accordingly be doing our calculations. Perfect, boss. Yes, then we had gone into question number 5. Here what is happening is, I am having a demand of 10,000 units, but right now production capacity is 8,000 only. So sir, extra 2,000, what I should be doing? 2 options question gave me. Either I can subcontract my production for 2,000 units. For every unit I will be incurring 225, or I can install the additional machinery. So if I see the data, what all is given, firstly all my cost I bifurcated into variable, fixed. Variable I want it on per unit basis. I did that. Fixed cost I kept it on total basis. Yes, in case of fixed cost, existing fixed cost was anyways there for 8,000. If I am going for 10,000 level, there are some 2 additional fixed costs. Here this is 10,000 per year, this is 20,000 per year will be incurred. This also I will include, I will be getting the total fixed cost. Okay, boss. In that, every option was there. First option is I subcontract 2,000 units at the rate of 225. I will tell 8,000 in-house, 2,000 subcontract. I will get 10,000 total. I will arrive at the profit. Second one is I will install the additional machinery. Yes, when I install the additional machinery, depreciation cost will come, interest on capital will come. Here one special point that was given is regarding labor. Yes, they are telling for this 2,000 extra units, now we get extra labor, 10 extra workers we get. Yes, for every worker I am paying 500 each for 1 month, add 25% fringe benefit. So I will tell 500 plus 25% fringe benefit will be the total salary for one employee. Like that I have 10 employee into 10. So I will get it for 1 month. This I want for a year. All the data is for a year. So into 12 months I will be getting for an entire year. This is a quick rocket revision, so that once you have studied this, again you guys are revising it quickly. The important adjustments quickly it will hit your mind. So that based on that it becomes simple for you to solve the question. Okay everyone. So based on that I will again try doing the calculation. Now while I am doing the calculation, pay attention. Yes, variable cost on per unit basis I calculated and kept. So when I am doing it in this case, yes, existing capacity 8,000, additional capacity 2,000. How I will do the calculation? Sales I will do. Yes, in case of variable cost, first I will write down wages, then I will write down all other variable cost. Why?
because wages question has specifically told for existing 8,000 units I have calculated variable cost per unit is how much. But for the additional 2,000 units, now question has told I am not getting the work done from existing employees. Yes, I am getting the work done from new employees. For them I am paying 500 per month plus 25% fringe benefits into 10 employees into 12 months. Accordingly, I will be arriving at the value. All other cost on per unit basis you have calculated. Accordingly, you will be doing the calculation. You will arrive at contribution as well as profit. Is this clear, everyone? Perfect. This was question number 5. Then we had seen question number 6. So what is the crux of this question? Question number 6, what is happening is Zoyan Limited is a company. Right now it is producing ZN100, a product. Yes, right now what it was doing is it was operating at full capacity, and by operating at full capacity it was in a position to produce 5,000 units only. So a proposal came up, because we are having a higher demand. I can either purchase some units of ZN100 from outside. Directly I can purchase and I can sell it also. Apart from that, one more thing I can do. I can manufacture ZN200 also, a new product. So the first thing they asked us was, yes, how much is my contribution per unit if I manufacture in-house, if I purchase from outside, if I manufacture ZN200. So it was a very simple thing. Yes, what we did is, yes, we bifurcated all our cost as variable, fixed. Variable, every cost we calculated on per unit basis. We arrived at the total variable cost per unit. If I am manufacturing, yes, I will incur my direct material, direct labor, direct expense, variable manufacturing overhead, variable admin and selling and distribution overhead. Here one of the most important adjustment was the calculation of fixed manufacturing cost. Pay attention, everyone. Look at this. So what all crux we want to do that calculation. Firstly, question told variable machine operating cost is 150. That is, to produce ZN100, I am incurring 150. Yes, and again question told, yes, I am incurring 100 rupees per machine hour. That means if my machine works for 1 hour, 100 is my cost. That means if 150 is cost, how much hours my machine has worked? 1.5 hours. And right now question is telling, by operating at full capacity, we are producing 5,000 units. That means total how much hours we are working? 5,000 into 1.5, 7,500 hours. Yes, if we go below, question is telling me that I am recovering, absorbing my fixed manufacturing overheads by taking machine hours as a basis. My fixed manufacturing overhead is 3 lakh. So I'll tell, okay boss, 3 lakh is a cost for 7,500 hours. That means per hour it is 40. So tell me, here I am having my manufacturing cost is 180. Manufacturing cost is 180. I have to bifurcate how much is variable, how much is fixed. I will tell fixed. Boss, fixed cost is 40 per machine hour. To produce a ZN100, I have worked 1.5 hours. That means it will be 60. That means balance 120 will be my variable cost. Is this clear, everyone? This was an important adjustment. Using that, I will be arriving at my variable cost. Accordingly, I will arrive at my contribution. Not a big deal at all. Then they told, boss, which product should I produce first? I told, ZN100, I can manufacture one in-house. ZN200 also I can manufacture in-house. In both the cases, I calculated contribution per unit. But I am having a limiting factor. Total hours is 7,500 only. So I will be taking a decision based on contribution per limiting factor. So I did a divided by limiting factor per unit. I got my contribution per limiting factor. Accordingly, I gave the ranking. Now it was time to allocate the resources. So first rank came for ZN200. So that maximum I produce, full 12,000 units. Then balance resources, I produce ZN100. ZN100, 1,000 only I could produce. So ZN200, full 12,000 we produce. ZN100, 1,000 only we produce. But the total demand for ZN100 was 8,000 units. In-house I manufactured 1,000. But there was one more option. External supplier was there. He was willing to supply up to 6,000. Maximum 6,000 units he was willing to supply. So I saw, if I am purchasing from him and selling, am I having a positive contribution? Yes. 6,000 units I got from him. I sold it as well. Is this clear, everyone? That was the question. Then question number 7, the final question was MN Agarwal. Yes, businesses. Yes, beautiful question it was. Yes, what is happening? They are having 3 businesses. Firstly, gift shop is there, which is operating for 4 months at 80%. Restaurants for 4 months at 80%. Lodge for 4 months at 90%. Now all my data, sales is given, some costs are given as variable, some are given as fixed. In that fixed also, some fixed cost is for 4 months, some fixed cost is for full year. What we did, the first step that we did was we bifurcated our cost. Yes, how much is variable, how much is fixed we did. And then here we saw that my data, variable cost data and sales are dependent on 2 factors. One is the percentage capacity, one is the number of months. So we calculated our sales as well as variable cost.
for 1 month at 1% capacity. Is this clear, everyone? Suppose for gift shop, the total sales is 48,000. It is for 4 months at 80%. So I will tell, okay boss, 48,000 is for 4 months divided by 4. I got it for 1 month. It is for 80% divided by 80. I got for 1% capacity. Similarly, I did for all the sales data. Yes, similarly, I did for all the variable cost. Fixed cost, some fixed cost was for the period, season only, 4 months. Some fixed cost was for full 12 months. I bifurcated that and kept. So accordingly, what I got my variable cost for 1 month, 1% capacity. I got my fixed cost for 4 months. I got my fixed cost for 12 months. Okay, boss, great. Based on that, I calculated sales variable cost, the normal contribution at 1% capacity. Okay. Based on that, first option was I will operate in season only, but extra 10% in every business I will operate. How do I achieve extra 10%? That is through extra advertisement. They ask me how much extra profit I am getting. Firstly, I will show the incremental contribution. Yes, from that I will reduce the additional fixed cost. I will arrive at the additional profit. Is this clear, everyone? Strategy 2 they gave. That is what they are telling is, say for example, I am having lodge. Right now 4 months season, I am already operating at 90%. In future also same thing will continue. But balance 8 months is there now, off season. That time also I will continue. But that time I will be having 40% only. And because it is off season, I cannot sell at the normal price. I will be giving it 50%. Similar data structure is available for gift shop and restaurant also. I will only tell for lodge. So what I told, I am telling boss, this data will anyways continue. Now for off season, tell me my sales for 1 month at 1% capacity is 500 in the normal time. During off season, question told me that I will be charging 50% only. That means it is going to be 250 for 1 month at 1%. Yes, I want for 8 months at 40%. So into 8 into 40, I will arrive at the additional sale. Yes, variable cost is going to be same. Yes or no? Just because I have given a discount does not mean that my variable cost will also reduce. So it is going to be 50 for 1 month 1% into 8 months into 40. I will arrive at the additional variable cost. Now fixed cost is there. Some fixed cost was incurred for 4 months. That is only during season. That means if I operate for extra 8 months, again I will have to incur that. So for 4 more months, 2 times I will have to be incurring that. So I showed that calculation. Yes, that is for 4 months it is 27,300. I want to now operate for extra 8 months. That means how much extra I have to pay, cross multiplication. Some cost was already incurred for 12 months. Say Chaukidar salary. So whether the business was continued or not continued, that cost was already incurred. That means if I continue for 8 more months, am I incurring it extra? No boss, that means it becomes irrelevant. Accordingly, I calculated the additional profit for every unit as well as for company as a whole. Yes, based on that, yes, we gave the comment. Yes, this was a quick crux of all the questions. Yes, in 15 minutes. So next time you guys are solving, before you solve, you can listen to this one time. Why? So that based on that, your solving ability becomes faster. That's all for this session. See you guys in the next session. Take care. We have started our discussion on activity-based costing. So we told that first, overhead is an indirect cost of the organization. For 1 unit, how much is the overhead cost? I cannot calculate directly. So I should be following a framework in order to distribute my overhead cost to the products. It is a 4-step framework, students. What are the 4 steps to be followed? Step 1, we estimate what is the total overheads. Okay, boss, we estimated. Yes, using that step 2, we link it to a suitable basis. Once we do that, we will arrive at our overhead recovery rate, which is overhead divided by basis. Using our recovery rate, we will be charging the overheads to the cost object. Say for example, I am telling, I estimated that my total overhead cost is, say for example, what happened? Okay, 10 lakh rupees. I linked it with the basis. Suppose I told it is incurred based on labor hours. So I told total 1 lakh labor hours is incurred. That means now I got my overhead recovery rate. It is going to be 10 per labor hour. Now using this, I will charge, say for example, to produce A. Altogether 100 hours I have worked. That means 100 hours into 10 per hour. 1000 rupees is going to be the cost. So on and so forth. Now this calculation in how much depth we are doing. Using that, we are having 3 different methods for distributing overheads. I have the single rate, I have the departmental rate, I have the activity based costing. Yes, single rate as well as departmental rate are also called as traditional conventional methods. ABC is also called as the modern method of charging overheads. Now sir, what is the difference, sir? In all the 3 methods, I am following the same 4 steps, but the level of detailing is different. In single rate, I will be doing calculation for the entire organization. Yes, in departmental rate, the total overhead cost, I will split it department wise. That means for every department I will do the calculation. In ABC, yes, I will go even further detail. Yes, the total cost I will split it activity wise, and for every activity I will be doing the calculations. Say for example, yes, I have given you this example already. Assume the total food bill is 5 lakh. Single rate is telling, okay boss, total food bill is 5 lakh, total 1000 people came, that means 500 per person. Yes, departmental, same thing, it is doing in a slightly more detailed way. Little, okay boss, total food bill is 5 lakh. In that veg is 1.5 lakh, non-veg is 3 lakh, sweets is 50,000. Now for every department I got the overhead. For every department I will link it with the basis. For every department I will get the recovery rate. Using that I will charge. Yes, in ABC it is going to be even more detailed. For every activity, total overhead I will split it into activities. That means for every activity I will get the overhead. For every activity I will get the basis. For every activity I will arrive at the recovery rate. Using that I will be charging my overhead to the cost object. Is this clear everyone? Yes, in activity based costing we have used a formula which is activity cost driver rate is activity cost pool divided by activity cost driver. Sir, what on earth is it? Yes, activity cost pool means it is the total overhead cost of the activity. Activity cost pool means it is the total overhead cost of the activity. Yes or no everyone? Yes, activity cost driver means it is the factor that drives the cost of the activity, which is nothing but the basis. So once you divide, you will be getting the activity cost driver rate, which means one time I perform my activity, how much is the cost? Simple example, setting up of the machine. Assume for one period to set up the machine I have incurred 10 lakh. What is this? This is the total cost to set up my machine, which is nothing but activity cost pool. For the activity, all cost I pooled. Now tell me, my setup cost, on what basis it is dependent? It is dependent based on the number of times I set up my machine. That is my activity cost driver. Using this factor, my cost will vary. Yes, more times I set up my machine, more will be the cost. Less times I set up my machine, less is going to be the cost. Assume I am telling the total cost for setting up is 10 lakh. Yes, I have set up my machine 1000 times. That means one time to set up the machine. How much is the cost? Sir, it is a 10 lakh divided by 1000 setups. So it is going to be 100 rupees per setup. Yes or no everyone? Perfect. How did I arrive? It is activity cost pool. That is the total overhead cost for the activity divided by activity cost driver. It is the number of times activity is performed. I will arrive at the activity cost driver rate. It is one time you perform the activity, how much is the cost? 100 rupees per setup. Using that you will be charging it to the products. Yes or no everyone? Perfect. Then we are told there is going to be a 3-step framework to solve any question on ABC. Step number 1, I will calculate the activity cost driver rate. Okay, so I will write down every activity one by one. For every activity, I will write down the activity cost pool, that is the total overhead cost. For every activity, I will write down the activity cost driver, which is the basis. Then I will calculate the activity cost driver rate, which is activity cost pool divided by activity cost driver. Okay, sir. Then once I arrived at the activity cost driver rate, I have told you one very simple thing. The moment I see a question on ABC, first I will not see the products. Yes, I want to calculate cost for the products, but first I will not see the products. I will only see the activities. For every activity, I will calculate the cost. That is my activity cost driver rate. Once I know for every activity how much is the cost, using that I will allocate my cost to the products. Say for example, activity 1 was there, setup was there. It is 100 rupees per setup. To produce A, I have set up my machine 50 times, to produce B 30 times, to produce C 20 times. So can I tell 100 per setup into 50 setups, it is going to be 5000 for A, similarly 3000 for B, similarly 2000 for C. Similarly all activities one by one I will write. I will add all of it. I will arrive at the total overhead cost. If I want my overhead cost per unit divided by number of units, I will arrive at the overhead cost per unit. Yes or no everyone? Perfect. Now once I have arrived at the overhead cost per unit, yes, now I want to calculate step 3, which is calculation of total cost per unit, wherein I will tell I have my direct material, direct labor, direct expense, which is the prime cost plus overhead cost per unit. I will arrive at the total cost per unit. 3 steps. Step 1, calculate activity cost driver rate. Step 2, using that allocate overheads to the products and calculate your overhead cost per unit. Step 3, calculate the total cost per unit. Every question on ABC we will solve using this framework. Is this clear everyone? Okay. Sir, what was special? One point special we had discussed. That is where activity cost pool is not given directly. Yes, but total overhead cost can be calculated. Simple example again I am showing here. Question told me that I am producing A and B. To produce 1 unit of A, I have to work for 10 machine hours. That way 3000 units of A have produced, that means total 30,000 hours my machine would have worked to produce A. Similarly B, for 1 unit of B 18 hours is needed. Yes, that way 5000 units we produce, that means total 90,000 hours would be needed. So total 30 plus 90, 1.2 lakh machine hours we worked. Yes, question told me that right now I am recovering my overhead based on machine hours, and right now, yes, the machine hour rate is 6 rupees per hour. That means for 1 hour 6 rupees overhead I am incurring. Total how much hours we worked? 1,20,000. So accordingly I will arrive at the total overhead cost. Yes, 6 per hour into 1,20,000, which is going to be 7,20,000. Step 1, we will calculate the total overhead cost for the organization. Overhead divided by basis gives me overhead recovery rate. Recovery rate will be given. Basis can be calculated. Using that I will arrive at the, yes, total overhead. Once I know what is my total overheads, now question will tell me, boss, in my total overhead, 7,20,000, 60% is for machine setup, 40% is for machine operation. So if I split it activity wise, I will arrive at the activity cost pool for every activity. Is this clear, everyone? Yes or no? Yes or no? Yes or no? Yes. Important observations we have told for all the three methods. Firstly, prime cost per method will be same in all the three methods, because we are only distributing the overhead cost. Yes. Observation number 2, total overhead cost will be same, just how I split is going to be different. Third, if I am producing only one product, irrespective of in which method I distribute my overhead, it will be same only, because ultimately all the cost is charged to that product only. Is this clear, everyone? Perfect. So with this we have finished unit number 1, which is going to be activity based costing. I hope you guys have thoroughly enjoyed this. Yes sir. Just in time. Sir, what is just in time? It is a demand based pull system of production. Okay, so we are having two things, just in time production, JIT purchase. JIT production, what is it, sir? It is a production system. It is based on what, sir? It is based on the demand of finished goods. That is where every component is produced only when it is needed for the next stage of production. Great, boss. JIT purchase, sir, what is it, sir? It is a purchase system. Sir, how do we purchase, sir? Where every component is purchased in such a way that the receipt of raw material as well as the usage of raw material coincide, do in your hands, coincide to the maximum possible extent. Okay, great, boss. What all types of questions can come? Type 1 question, where two options are there. Company is there without JIT, with the JIT. I will be following incremental approach, accordingly I will be doing. Or type 2, more than two options are available. Supplier 1, supplier 2, no JIT, JIT, no JIT, JIT. Multiple options are there. So there is no option, I will have to go for the total approach only. Okay, boss, great. Now only two options are available. Yes, I will draw, yes, particulars, benefit column, cost column. In benefit I will show what is the additional benefit in JIT. In cost I will show the additional cost in JIT. Is this clear, everyone? So accordingly I will calculate the total benefit, total cost, I will calculate the net benefit. Is this clear, everyone? There are some additional points to be kept in mind. Yes, firstly it is a treatment of the investment amount. Always understand, investment is not cost. Suppose question told, in order to implement JIT we want additional investment of 10 lakh. Don't write 10 lakh in cost, that is investment, boss. Then question told me, in my investment I want 10% return. Okay, now 10% of that 1 lakh, that is my cost, because that is a cost of capital. Is this clear? Similarly, question told, raw material stock holding cost was previously 40 lakh, now it is 10 lakh. That means 30 lakh it reduced. Does it mean my cost has reduced by 30 lakh? No, my investment has reduced by 30 lakh. That means net benefit is a savings in the interest cost. Assume it is 10%, 30 lakh into 10%, 3 lakh is going to be my benefit. Okay, only interest is going to be the benefit or cost. Keep that on the back of your mind. Point number 1. Yes, point number 2 is going to be, yes, depreciation. It is a non-cash capital item. So all investment decisions will be taking on the basis of cash flows. So depreciation we will be ignoring. Question will specifically tell you to ignore. Even if it is not given, we will give a note below that this is a non-cash capital item, so it is ignored. Is this clear, everyone? Perfect. Yes, then came when we are having more than two alternatives. We had seen Ultra, yes, Yash company as well as Ram company without JIT, JIT, JIT. Yes or no? Three options were available. The most important thing for us is to write down the data. Exactly each and every data. Once you write down, the answer becomes very simple. Is this clear, everyone? Perfect. So this is what we had discussed. The next thing we had discussed was calculation of EOQ. In that we had discussed one of the most important things is purchase cost is for 1 unit how much, like that total how much units I have purchased, price per unit into annual demand of raw material. Ordering cost, it is my ordering cost per order. For one order how much into number of orders. How do I get my number of orders? Annual demand divided by ordering quantity. Total how much quantity I want divided by one time how much I'm purchasing. Carrying cost. Yes, to hold the goods how much I'm incurring. Mainly 4 components will come. Firstly, yes, we have the storage cost, we have the insurance cost, we have the interest cost, we have the obsolescence cost. Yes, we told what is the formula of total carrying cost. It is carrying cost per unit per annum. That is to hold 1 unit for 1 year, how much it is, into number of units which is held throughout the year, which is nothing but my average inventory. Carrying cost per unit per annum is normally given as a percentage of purchase price. Average inventory is ordering quantity divided by 2. Yes, we had seen one example of calculating carrying cost, total carrying cost. Question told me that currently I am purchasing 1200 units 13 times a year. Purchase price is 150. We want 10% annual return on investment. Yes, the moment I see this, I should understand that, boss, if I purchase 1 unit, 150 I am paying. To hold it for 1 year, 10% on that, 15 rupees is going to be the carrying cost. Apart from that, question told insurance is 10 rupee per unit per annum. So I'll tell, for insurance I am paying 10 rupee per unit per annum. Yes, because I am holding, interest cost I will be incurring 15. So total carrying cost is 25 rupees per unit per annum. Yes, like that, how many units I am having on an average throughout the year? Every time I am buying 1200. So the day I purchase I am having 1200. By end of the period I am having 0. So on an average 600 units I am having. So it is going to be 25 into 600. 15,000 rupees. Is this clear, everyone? Then miscellaneous areas, advantages as well as disadvantages of GIT. Advantages of GIT. Yes. Firstly, my waste gets reduced. Yes. Next, my raw material stock holding cost gets reduced. Thirdly, my working capital gets reduced. Yes. Because of that, what all benefits I am having? Okay, boss. Benefit number 1, my profit increases. Yes. My ROI increases. Customer satisfaction increases. In addition to that, I will be more adaptable to changes in demand. 7 points. You can remember just 2 or 3. If in case you want, you should be having the masala, that's all. Yes, disadvantages. Yes, firstly, yes, we will be having 0 tolerance for defects because we are already working on due dates. Secondly, there is a high dependence on the suppliers. Yes or no, everyone? Perfect. Yes, there is going to be no buffer for delays. If there is a sudden spike in demand, I will not be in a position to do anything. Yes, higher transaction cost, ordering cost I will be incurring because I am ordering multiple times. Is this clear, everyone? With this, we have finished unit number 2 just in time. A beautiful unit. I hope you guys have enjoyed it as well. So go back, revise, prepare a short summary note of the concepts, every adjustment of the question, write it down. Only 2 questions we are having. Okay, so if a question comes from this, we have to score maximum marks. That should be our intention. Every unit we take properly, arams in the most detailed way we will do, even though we spend a bit more time, so that irrespective of however a question comes, we should be in a position to tackle it and achieve full marks. You should be aiming for 100 out of 100. You should not be aiming 10, 20, yes, 40, 50. Aim for 100. So if you aim for 100, definitely you will reach 80, 85. That is the level of efforts we are putting. Each and every question from each and every nook and corner we are doing. Nothing more is there, students. Just have faith in this. Just to keep revising, repeating, solving questions. That's all for this session. See you guys in the next session. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud. And see you in the next session. Take care. Bye. Yes, pay attention, everyone. Yes, let us quickly revise. Yes, unit number 3, which is throughput accounting. Now, throughput accounting is a set of principles to manage my bottleneck and earn the maximum profit from my bottleneck. So comes a very important question. Sir, what on earth is a bottleneck? Yes, bottleneck means any process which slows down the overall speed of production. Yes, in simple terms, it is a resource which is in the most scarcity. That is, it is the limiting factor amongst my limiting factors. Is this clear, everyone? Okay, boss. So Goldratt and Cox, they had advocated optimized production technology, OPT, wherein they told, boss, do not try producing maximum. First, bifurcate your resources as bottleneck, non-bottleneck. Bottleneck you exploit fully. Non-bottleneck's production usage should be based on the capacity of bottleneck. This will ensure that there is no work in progress blockage. Is this clear, everyone? Perfect. So different names which can be used. Yes, throughput accounting, throughput costing, theory of constraints, super marginal costing, etc. Yes, we have told what is a bottleneck. Yes, then, yes, we have told how do I bifurcate my cost in throughput accounting. Very important. Product cost. My throughput tells that the only cost which is truly variable, which is incurred directly for a product, only for a product, is only my direct material cost.
Every other cost, in short term basis, it is already fixed, committed in nature. So I'll be showing it as my operating expenses. That means tell me what all will be there. Yes, I have a direct material, direct labor, direct expenses, variable overhead, fixed overhead. Only my direct material is my product cost. Every other cost will be shown as a part of operating expenses. Great, sir. Now, how do I come up with the profit statement in throughput? Sales minus direct material cost gives me throughput contribution minus operating expenses gives me my profit. Yes or no, everyone? Perfect. Yes. Now, altogether questions we have told, altogether 3 different types of questions can be there. Yes. Type 1 is how do we identify the bottleneck? Type 2 is once we have identified the bottleneck, now how do I exploit and earn maximum profit? Then we are having the miscellaneous questions. Okay, sir. How do I identify my bottleneck? Now, from an examination perspective, not very important. But, sir, how do we do that, sir? First, yes, I will write down which all resources are there. I will write down the total requirement of every resource. Total how much resource is required. Then I will write down how much resource is available. Based on that, I will be calculating my RAR, which is the requirement to availability ratio, which is requirement divided by availability. Yes or no? Say for example, requirement is 3, availability is 1. So I got my RAR as 3. It means 3 divided by 1. Yes, what on earth does it mean? It means that if 1 unit of resource is available, 3 unit of resource is required. That means if 3 unit of resource was required, now only 1 unit is available, that is 2 unit is missing. Yes or no, everyone? So what is going to be my bottleneck? The resource which is having the highest RAR is going to be my bottleneck. But if a product is having my RAR which is less than 1, it can never be my bottleneck because availability is already there, so there is no shortage of them. Is this clear, everyone? This for us for examination is not very important. For us for examination, what is important is how do I utilize my bottleneck and earn maximum profit. Okay, boss. Now, yes, we have discussed, in case of limiting factor, what should be done. 4-step framework. Step 1, we will calculate contribution per unit. Using that, we will be calculating contribution per limiting factor. Using that, we will be giving a ranking. Using that, we will be allocating the resources. Same thing will happen here. In throughput, yes, what is the first step that I will be doing? I will calculate contribution. Which contribution, students? I will calculate the throughput contribution per unit. How do I arrive at the throughput contribution? Selling price minus my direct material cost. Perfect. But tell me, will I be taking a decision based on contribution per unit? No, sir. Contribution per limiting factor. That means I will be calculating my throughput contribution per bottleneck resource. It is the throughput contribution per unit divided by bottleneck resource per unit. Normally for me, bottleneck is going to be in terms of hours or minutes. So I will normally be telling it as either return per hour or return per minute. Yes or no, everyone? Perfect. Using that, I will be giving the ranking. Using that, I will be allocating the resources. If some minimum demand has to be fulfilled for any product, first I will fulfill that, then I will distribute in the ranking. Yes or no, everyone? Perfect, boss. Then sometimes question may also ask me to calculate throughput accounting ratio and distribute based on throughput accounting ratio. So tell me what exactly on earth is throughput accounting ratio? Yes, it is the ratio of return to cost. That is for 1 rupee cost, how much return I am earning. As simple as that. So how do I calculate, students? Yes, step 1, I will calculate my throughput contribution per bottleneck resource. That is basically my return per hour or return per minute. Then I will calculate my factory cost per bottleneck resource. That is basically my cost per hour or cost per minute. This ratio is called as throughput accounting ratio. Suppose I have my throughput accounting ratio as a 3 or 5. What does it mean? 5 means it is basically 5 divided by 1. Yes, it means if I am having 1 rupee fixed cost or 1 rupee operating expense, to recover that, how much return, how much contribution I am getting? 5 rupees I am receiving. Yes or no? That means in the 5 rupees, even if I pay 1 rupee, still 4 rupee profit will be left with me. Yes, that means product is profit making. Yes or no, everyone? Perfect. So I will be allocating the resources in the ranking of my throughput accounting ratio. Highest TA ratio, I will be giving the first ranking. Yes or no, everyone? Perfect. Now how do I take a decision? If product is having a throughput accounting ratio more than 1, means it is profitable on overall basis.
If it is exactly 1 means it is indifference, doesn't make a difference for me. But if it is less than 1 means it is not profitable. We should come up with attempts to increase my throughput accounting ratio more than 1. Is this clear everyone? Using that we had solved a good amount of questions. Some basic questions we had done. Yes, apart from that some decision making questions also we had done. Decision making, first one was independent proposals. Therein what used to happen was, cutting department is there which can produce 10,000 units. Finishing department is there, it can produce 5,000 only. That means right now I am producing 5,000 only. Okay, now tell me, first step for a decision making question is I will identify what is a bottleneck, what is a non-bottleneck. Tell me students, what is a bottleneck? Finishing is my bottleneck, cutting is my non-bottleneck. So if anyone comes up with a proposal to enhance the capacity of non-bottleneck, will I undertake that assignment? No. Thakka one I will give to their face and tell, yes, current capacity only I am not in a position to produce. What will I do by enhancing my capacity? That means only where I will think about enhancing the capacity, only in my bottleneck. There also I will see, if I enhance the capacity, how much extra cost I am incurring, how much extra revenue I am getting, incremental benefit, incremental cost, accordingly I will take a decision. Yes or no everyone? Perfect. So on those lines 2 questions we had. Then we had one more question, question number 7, where what is happening? Right now machine X is producing 800 units. Y is producing 600 units, Z is producing 500 units. That way altogether 500 units I was producing right now. Question told me 3 different proposals are there. Proposal 1, I will enhance the capacity of X. Proposal 2, I will enhance the capacity of Y. Proposal 3, I will enhance the capacity of Z. In that case, total how many units can be produced in that respective machine and how much extra cost is given. And question told me that, I can take a combination of multiple proposals also. There is no need that only one proposal I have to evaluate. That means tell me what all can happen. Yes, proposal 1 is there, 2 is there, 3 is there. So option 1, I will only go for proposal 1, or only 2, or only 3. Or I can go for 1 and 2, or I can go for 2 and 3, or I can go for 1 and 3, or I can go for all 3 together, 1, 2 and 3. In each of these options, yes, altogether how many units I am producing and selling. That means how much extra units I am selling, based on that how much extra revenue I am getting, as against that how much extra cost I will incur. That means net how much benefit I am getting. Wherever I get the highest additional net benefit, we will be going for that alternative. Yes or no everyone? Perfect. Then we continued our discussion further, yes, to the miscellaneous areas. There the first point we had discussed was profit statement in throughput. Simple, sales minus direct material gave me my throughput contribution, minus operating expense gave me my profit. A simple point I discussed, a simple framework I told students, yes, my direct material cost as well as variable selling overhead. Direct material cost, it is my product cost. Product cost is always charged, yes, specifically against the goods sold in my profit or loss statement. Only then matching will be happening. Okay, variable selling overhead. Selling overhead is incurred only on the units sold. That means these, if the cost is given on per unit, I will multiply by number of units sold. Is this clear everyone? But every other cost, suppose question gave you direct labor, direct expense, variable factory overhead, all these are going to be my period cost. So it is not charged specifically to the product. It is written off in the period in which it is incurred. Yes or no? And direct labor, yes, variable factory overheads. All these costs, they are incurred on how many units? It is incurred on all the units which is produced. That means I will multiply by number of units produced. Is this clear everyone? This is how we will be arriving at our profit statement. So my direct material cost, I will multiply by number of units sold. Selling and distribution, anyways it is incurred only on the units sold, but every other cost I will multiply by the number of units produced. Is this clear everyone? Perfect. Yes. Then the final point we had told was calculation of throughput cost as well as my efficiency ratio. Using this simple example only, let me try seeing it again. Pay attention students. Question told me that I am producing X and Y. Yes, the standard time to produce 1 unit, how much they have given. Yes, that way how many units we have produced is given. So if I multiply this now, I will arrive at my standard hours. Yes or no everyone? Perfect. Then question told me that in the next period, yes, my cost is going to be 78,250. It is going to be for 31,300 minutes. That means can I arrive at my cost per minute? Yes sir, 78,250 is my cost. It is for 31,300 minutes. That means it is 2.5 per minute. So I know for 1 minute my cost is 2.5. Like that how much minutes work I did? 30,250. So I will arrive at my absorbed overheads recovered overheads, standard cost, that itself is called as my throughput cost. Yes or no? So I'll tell it is 2.5 per minute into 30,250, 75,625. Okay, boss. Then comes the concept of efficiency ratio. Tell me, students, how much cost I have absorbed, recovered, throughput? 75,625. Yes, how much cost actually I paid? 78,250 I paid. That means tell me whether my entire cost I recovered. No, sir, my recovery was less. Is it good situation or bad situation? Bad, sir. Why? 78,000 cost I paid, but I recovered 75,000 only. Na? That means how much percentage of my total cost I recovered? I told boss total cost is 78,250. In that 75,625 something I have recovered. That gives me the efficiency, which is standard cost divided by actual cost into 100. Yes or no, everyone? Perfect. Then we have discussed some miscellaneous pointers for theory. In that first one we have discussed was traditional costing versus throughput. Yes, two main pointers are there. Point number one, yes, inventory as a liability versus inventory as an asset. Traditionally, I will always view my inventory as an asset because it has the capacity to generate money in the future. But throughput tells, wait boss, it is unnecessarily holding my money currently, which I could have used it better elsewhere. So, yes, throughput always views my inventory as a liability. That is, unless it is required, I will not produce and stock it up. Okay, boss. Point number two was focus on cutting expenses versus focus on increasing throughput. Traditional account, I was always thinking about reducing my cost on the assumption that if my cost reduces, my profit automatically increases. But on this, there is a limit. If you try doing it much, your quality, brand value will be impacted. Alternatively, what throughput is telling is operating expense, let it be there. Yes, sir. Try focusing on increasing your throughput contribution. That is the incoming money. Here, there is no limit. So, you can be earning, yes, more here. Is this clear, everyone? These are the two differences. Then, Goldratt's 5-step framework to improve performance. What are those 5 steps? Step 1, identify the bottleneck. Step 2, exploit the bottleneck. Step 3, subordinate and synchronize everything else to the bottleneck. Step 4, elevate the performance of bottleneck. Step 5, repeat the process. Is this clear? Then we have told core measures in throughput accounting. How do we measure the performance? 3 things are there. One is the incoming money, which is the throughput. Ideally, it should be increased. One is the outgoing money, money which is leaving the system, which is operating expense. Ideally, it should be decreased. One more is the money which is blocked in the system, which is my investment. Ideally, it should be minimum. Yes or no, everyone? This is all about this unit. A small, sweet, simple scoring unit. I want you guys to go back, revise all the concepts, quickly make a summary of all the adjustments so that whenever a question comes in the examination, we attempt confidently and get full marks. Is this clear, everyone? That's all for this session. See you guys in the next video. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud, and see you in the next session. Take care. Bye. Yes, everyone. So now it is time for us to revise unit number 2, which is going to be cost of quality. So what is cost of quality telling? We told quality is important in a business, but quality is not free. It comes with a cost. Either you incur the cost now or you pay the cost later. That is, either you incur the cost in order to produce a good quality goods or services, or else if you do not incur that, yes, you will have to incur the cost. Why? Because you did not produce good quality goods or services. That is, I am having 2 different costs. Cost of good quality, cost of poor quality. Cost of good quality, it is the cost that I am incurring. Why? In order to produce good quality goods or services. Cost of poor quality, it is the cost that I am incurring. Why? Because I did not produce good quality goods or services. Cost of good quality is also called as cost of conformance, cost of control. Cost of poor quality is also called as cost of non-conformance, cost of failure of control. Okay. Cost of good quality. In order to produce good quality goods or services, 2 costs I will be incurring. Prevention cost, appraisal cost. What is prevention cost telling? It is the cost that I am incurring to prevent any defects from happening. I am preventing any defects from happening at the first place. Appraisal, what I am doing? To check and monitor if good quality goods are getting produced or not. Prevention, what am I doing? I am preventing defects from happening. Yes, appraisal, I am checking if the goods that are produced are good quality or not. Prevention cost, yes, I do a supplier review and evaluation and I select the right supplier. Why? So that defects do not happen. Prevention cost, yes, I give quality training to my employees so that they produce it right, they do not commit mistakes. Prevention cost. I do the preventive maintenance of the machine. Why? So that this doesn't happen. Yes or no? I do quality review, quality audit, all those things we are doing, quality planning, quality assurance, all these things we are doing, so that I prevent defect from happening. Yes, supplier evaluation, maintenance. Yes, system development for prevention, design review. Even before we produce design, I will review, so that okay, there is no defects that may happen. Is this clear, everyone? Appraisal. Yes, normally during production, yes, I will inspect if good quality goods are produced or defectives are there. So inspection could be of raw material, work in progress, finished goods, or packing inspection, or I am getting an external certification, or testing equipment is there for checking purpose. It's a depreciation or cost, whatever it is will come under appraisal. Okay boss, next is cost of poor quality. I did not incur cost of good quality. I did not incur cost to produce good quality. That means you will incur cost because you did not produce good quality. Now, once your production is over, defects have occurred. How do you treat? Yes, if you take care of it before goods reach customer, it is internal failure. Yes, if you are incurring cost after goods have reached customer, it is external failure cost. So, internal failure, yes, it is associated with defects found before delivering the goods to customer. Yes, that means defects have occurred. Yes, I sold it as a scrap. I did a rework. Yes, retesting I am doing. Yes or no, everyone? Rectification I am doing. Repair I am doing. Downtime is there in the machine. Retesting. All these things are going to be internal failure. External failure means defects are found after delivering the goods to my customers. Yes, defects are discovered by the customer. So here what all will happen? Warranty cares, replacement, customer care. Yes, loss of revenue, loss of market share, product liability, complaints are happening, litigations are happening. Yes, complaints are getting handled. Yes, cost of returning the goods, all those things are there. Yes or no, everyone? We told optimal cost of quality is that level wherein the total cost of quality, that is cost of good quality plus cost of poor quality, is minimum. Yes or no, everyone? Using that we had solved questions. Yes, first one was a very simple question wherein question had asked tell cost of quality as a percentage of sale. So we expressed it as a percentage of sale. Yes or no, everyone? Perfect. Question number 1 was there. Simple question, it was not a big deal. Then question number 2 was actually a good question. I want you guys to review this and try this. So here what they have told is different items they have told. We have to bifurcate in which head it is coming. Then they have asked us to prepare a profit statement. Normally profit statement, sale minus variable cost is contribution minus fixed cost. In my fixed cost, I will show my normal fixed cost as well as the quality cost. Then I will arrive at my net profit. Is this clear, everyone? Then we had the third question wherein this was a beautiful question wherein they have told that 60,000 units I produced and sold. In that, there are some rectifiable defects. What is it? Defects are there, but can be rectified. That means if I understand, I will rectify. Either I understood through my inspection internally, I will rectify, or else I did not understand, it went to customer returned to me, I will rectify and give it. Okay boss, 60,000 units we produced. Okay boss, 60,000 units inspection also we did. So inspection cost I incurred. Now when we did inspection, we understood 5% defectives are there. So 60,000 into 5%, 3,000 pair we understood is defective. That means balance we thought there is no defective. Goods on which there is no defect, we directly sold to customer. Goods on which we identified a defect, we only did a rework on that. Internal failure, I only understood. Yes or no? Rework cost was 18 rupee per unit. So 3,000 into 18, 54,000 I incurred. Yes, that means altogether 3,000 plus 57,000. Altogether 60,000 I sold to customer. Great boss. Customer received 60,000. Customer is also checking. When customer received the goods, customer could identify 6% defects. So 60,000 units we sold ultimately. Yes, in that 6%, 3,600 units customer told is defective. That means balance goods is of perfect quality. These are 6% goods, that is 3,600 pair, that customer told is defective. What all is happening? Two things are happening. Point number 1, we have to bring it back to our company premises. For that I am incurring the transportation cost. I guess transportation cost is a 10 per unit. So into 3,600 units I incurred that. Now these are rectifiable defects. Customer has sent us the goods. What I have to do? I have to rectify that and send it back to customer. So I will be incurring the rectification or rework cost. Now tell me, rework I am doing upon whose identification of defect? Customer has identified. That means where will this cost come? External failure it will come. I will tell that for every unit, yes, rework or rectification is 18 rupees. So 3600 units into 18 is going to be my cost. Okay, boss. Then question told me that, boss, because defects have reached customer, next year there will be a reduction in my market value. Yes, market share. Yes, question told me that, yes, due to negative publicity, yes, loss in sale is going to be 5% of external failure. Tell me how much is external failure? 3600 units. 5% of that, that means 180 units, there will be a loss of sale. Tell me every unit I do not sell. Sale I do not make, but variable cost also I will not incur. That means my net loss is only the contribution. Is this clear? I will calculate contribution per unit. Every pair of shoe was 600 into 40% PV ratio 240. So I told 180 units I will not sell. On every unit 240 I lost. That gives me the total contribution loss. You add all of this, you will arrive at your total cost of quality. Accordingly, you will be preparing your profit statement also. Not a big deal. Is this clear, everyone? Yes, sir. Then comes question number 4, wherein we'll have to calculate decision making. Yes, a new system if we implement, some benefit I am incurring, some cost I am incurring. Yes, how much extra benefit I am getting, how much extra cost I am incurring, I will calculate the net benefit. Okay, cost directly is visible. Question is telling 3 lakh extra cost I have to incur, 4 lakh new machine I have to purchase. This is investment. Only the interest component is cost, 9% is cost. I show both the items in cost. Okay, boss, no issues only. Yes, then coming to benefit. Yes, benefit right now, 6,000 papers are damaged and unsold. In future, if I implement a new system, only 1,000 paper will be damaged. That means how much paper damage I can save? 5,000. Yes, every paper damage I was incurring 40 rupees cost. So 5,000 into 40, 2 lakh I saved. One benefit. The next thing is on time delivery. Newspaper. Right now only 80% newspaper I am giving it on time. In future 95% newspaper I will be delivering on time. That means 15% extra newspaper I will be delivering on time. Yes or no, everyone? Yes, question told me that if 1% there is an increase in on time performance, my revenue will increase by 35,000. Contribution is going to be 40%. That means how much extra contribution I will get? 35,000 into 40%, 14,000 for 1%. In our case, how much percent it increase? 15%. So 14,000 into 15, 2,10,000 is a benefit. You will calculate total benefit, total cost. Accordingly, you will be doing the calculation. Is this clear, everyone? Then we have the final question, beautiful question, wherein I will have to evaluate, yes, 2 suppliers, X limited, Y limited, without inspection, with inspection. So how do I do this calculation? Simple drawing I should be doing. I will tell only the case of inspection. Without inspection, using same principles, you can be solving. Yes, I purchase 10,000 units from supplier. Okay, boss. Normally from X limited, yes, 3% will be defectives. Okay. Now what I do is I appoint inspection process. That means tell me into company premises how many goods are coming. 10,000 units are coming. On how many units I did inspection? On entire 10,000. That means my inspection cost will be incurred on the total 10,000 units. Okay. Yes, normally if I am buying from X limited, how much percent defects are there? 3% defects are there, boss. That means 300 units will be defective. How much only will be of good quality? 9,700 only will be of good quality. Now 300 defects will be there. Now in my inspection process, how much defect only I can detect? Question told me that only 90% of defective components can be detected. That means total 300 defect will be there. But can I detect full 300? No, boss. Only 90% of that. 270 I can detect. That means 30 I did not detect. Question told me if I detect a defect, on that I will not pay the purchase price. Those goods I will send it back to my supplier. That means my purchase price I will pay on how many units? Total quantity 10,000 I received. In that defective, I detected 270. That means I return this. That means only on 9,730 units I pay the purchase price. Yes or no, everyone? So purchase price is paid on total quantity minus the defect detected. Point number 1. Inspection cost. How many units I inspected? 10,000. So inspection cost is incurred on the entire 10,000. Yes or no, everyone? Perfect. Yes. Third point, damage. If this defect is not detected, it will go into production, their damage will happen. Tell me total how much defect was there? 300. 270 I detected, I sent it back to supplier, but 30 I could not detect.
So it went into production process. That means my damage cost is incurred on how many units? 30 units. That is the defect undetected units. Yes or no, everyone? Perfect. And effectively, how much is a good quantity units? 10,000 I received. Yes, in that 300 is defective. That means effectively it is 9,700 only. So it is total quantity minus defect. If you know this, yes, answering this question is going to be very simple. Yes or no, everyone? So with this, we have finished unit number 2, cost of quality. Now, if you have not noted down question 5, yes, please pause and write it down. Yes, slide 1. Slide 2, slide 3, slide 4, slide 5, slide 6. Is this clear, everyone? Yes. So with this, we have finished unit number 2, cost of quality. That's all for this session. So go back home, revise the unit again, try solving all the questions, make short summary notes from this. Yes, we'll see you guys in the next session. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud, and see you in the next session. Take care. Bye. Yes, everyone. So hello, hi, namaskaram, my dear warriors. I hope you guys are doing really well. This is going to be a very special video for all my dear students. So we are discussing the chapter standard costing. In that, all the basics are over. We've spent a good amount of time, understood everything logically, revised multiple amounts of times in different ways, solved questions, everything we've done. Now we are going to take our journey forward for reconciliation. In the reconciliation, we will want all the formulas. So before going ahead, I thought we will do one rocket revision of all the formulas. I'm not going to give you guys the logic again, but based on how we have developed, quickly we are going to keep on playing with the formulas. Yes, one time I'm going to do it. Based on that, we'll go ahead to reconciliation. Point number 1. Point number 2, yes, it is recommended that you, before watching this video, have a quick revision of all the formulas one time. Point number 3, and most important thing is going to be that, yes, when I'm going to write, you are not just going to open your mouth and see, correct. You're going to take a piece of pen and paper, quickly keep scribbling what I'm going to write. Okay, I am going to write down all the formulas quickly the way we have developed the things. Okay, just that boxes I've done and kept so that I need not be taking much time. Okay, so roughly in around half an hour, we'll hope to revise all the things by writing it down. Point number 1. Point number 2, this video will be available for you guys. You guys can keep watching it again and again and again every time you feel like you're forgetting the chapter. So shall we start, everyone? So in 3, 2, 1 and action. Yes, everyone. So standard costing. First, let us define the basic terms. How did we define our material cost? We told was my material cost is nothing but quantity into price. Yes or no, everyone? Yes, labor, it is the hours into the rate per hour. How many hours my employee is working into per hour, how much rate I'm paying. Variable overheads, it is the hours into the recovery rate per hour. How much hours my employee is working, for every hour how much overhead I should be recovering. Okay, boss. Yes, next I've told in case of sales, it is again quantity into price. How many units I sold, at what price I sold. So overall structure of variance, overall change, it is going to be the total variance. Yes, it is going to be standard minus actual or actual minus standard in case of sales. Now in that, first what we are going to nullify, we are going to nullify the external factor. Yes or no, everyone? Perfect. So in case of material, I will first nullify the impact of price. In case of labor, I will first nullify the impact of rate. In case of variable overhead, the impact of recovery rate. In case of sales, the impact of price. Yes, here what is going to be my multiplier? Multiplier is going to be actual. Yes or no, everyone? Yes, once this is nullified, after that, I will go to the other place. Here what is going to be my multiplier? Yes, here my multiplier is going to be standard. Yes or no, everyone? Okay. So one by one, we are going to derive the formulas. First, material cost. Let me define the material cost. How do I define my material cost? Simple, boss. It is quantity into price. First, all the names of the formulas. Overall change in cost is called as material cost variance. In that, change in price is called as price variance. Change in quantity is called as usage variance. Usage variance, further analysis. Purely change in quantity, sub-usage or yield variance. Change in mix, purely change in mix is going to be my mix variance. How do I write down the formula? First, material cost variance. It is the overall change in the cost. Yes, I know for all my cost variance, change is always standard minus actual. Yes or no? Ideally, standard cost should be more. Actual cost should be less. So I will always be writing it as standard minus actual. So it is going to be standard cost of raw material minus actual cost. How do I arrive at my standard cost? Standard quantity into standard price, because my cost is quantity into price. So standard cost is standard quantity into standard price. Actual cost is going to be actual quantity into actual price. Perfect, everyone. So first, what am I going to nullify? The impact of price. So what is changing? Price is changing, difference in price. Convert into value, price has to be multiplied by quantity. Which quantity? Entire actual quantity. Yes or no? I have defined here also. Yes, in the overall change, first I will nullify the impact of price. There my multiplier is going to be actual. Is this clear? Once I have nullified, the impact of price is nullified. Now, from here onwards, wherever I am going to use price, which price only I will use? Standard price only I will be using. So I will write my multiplier is always going to be standard price. Usage variance, what is changing? Quantity is changing. So it is a difference in quantity, convert into value into price. Which price? Standard price. So it is going to be standard quantity minus actual quantity into standard price. This if I want to write, yes, difference in price, it is standard price minus actual price into actual quantity. Perfect. Now tell me what all I am having. I have a standard quantity. Yes, I have actual quantity. In the middle of the two, I am going to bring in my hero RSQ. First two is a sub usage, next two is going to be mix. Logically I have done, here I am not going to do it. Okay. So it is SQ minus RSQ, convert into value into SP. Here it is RSQ minus AQ, convert into value into SP. Is this clear, everyone? Yes, material cost variance is over. Now let us go ahead to the next discussion, which is going to be my labor cost variance. Labor cost. How did I define my labor cost? It is going to be hours into rate per hour. In labor cost, we have understood the formulas from two perspectives: without idle time, with idle time. For exam perspective, I told if you do with idle time, without automatically gets tackled. Now, there was one difference. Should I be taking actual hours worked, the actual hours paid? For that, I told you guys a simple mantra, simple shortcut. Yes, what did I tell? Yes, I told first two variance is going to be on actual hours paid. Third variance is going to be on the difference between actual hours paid and actual hours worked. Yes, my balance variances is going to be on actual hours worked. Yes or no, everyone? First two paid, third difference, balance is going to be worked. So based on that, let me derive cost variance. It is the overall change in the cost. So it is going to be standard cost of labor minus actual cost of labor. How did I define my cost? Hours into rate. So it is going to be standard hours into standard rate minus actual hours into actual rate. Sir, actual hours worked or paid, sir? I told you first two is going to be paid. It is going to be actual hours paid. So in the total change, first what am I going to nullify? The impact of rate. Yes or no, everyone? Perfect. Rate I am going to nullify. What is going to be my multiplier? Actual. So labor rate variance, it is the difference in rate, convert into value into hours, which hours? Entire actual hours. Actual hours worked or paid? Sir, first two, it is going to be paid. So it is going to be difference in rate, standard rate minus actual rate into actual hours paid. Is this clear, everyone? Okay. Now that I have nullified the impact of rate, wherever rate will come, which rate am I going to use? Sir, standard rate only I am going to use, sir. Okay. That means here my multiplier will always be standard rate. Now in that idle time variance, why is idle time variance coming? Because of idle time hours. Yes or no? So I will tell it is idle time hours. Convert into value into rate. Which rate? Standard rate. How do I get my idle time hours? It is the difference between actual hours worked and actual hours paid. Actual hours worked minus actual hours paid into standard rate. One very important thing, this is going to be always adverse for the organization. Yes or no, everyone? Perfect. Now that it is nullified, here I am having efficiency variance. What is changing? Hours is changing. Difference in hours, convert into value into rate. Which rate? Standard rate. It is going to be standard hours minus actual hours, convert into value into standard rate. Sir, actual hours worked or paid, sir? I told you that first two is going to be paid, third is going to be difference, balance is going to be worked. That means it is going to be worked. Further analysis, I have a standard hours, I have actual hours worked. In the middle of the two, I am going to bring in my RSH. First two is going to be, yes, sub efficiency. Next two is going to be mix organ. So it is SH minus RSH, convert into value into standard rate. This is RSH minus actual hours worked, convert into value into standard rate. Yes or no, everyone? Yes, here RSH, revised standard hours. It is my actual hours worked in standard. Is this clear, everyone? Perfect. So giving you guys a minute to let this sink in. I hope you guys are scribbling. This is a chapter we have logically understood, but trust me, I have told you
for us to logically derive 100 plus formulas every time to think from our brain is going to be difficult. So sir, what should we do? Should we by heart? No. Yes, the way I'm doing, you scribble 1 time, 2 time, 5 time, 10 times. Yes, I would have scribbled more than 10, 15 times every formula in the class, even though I know it. Why? For you guys. I hope you guys are not taking it for granted. Scribble it down. Trust me, you will not need to by heart a single formula. We have understood logically. Now we want to bring it to our muscle memory. Without thinking, it should flow. Okay, everyone? Labor is over. Now let us take our discussion forward to my variable overhead cost variance. How did I define my variable overhead cost, my dear students? I told it is going to be hours into my recovery rate per hour. Yes or no, everyone? That means first is the overall change, variable overhead cost variance. Then I have the change in the recovery rate, variable overhead budget or expenditure variance. Then I have the change in the hours, variable overhead efficiency variance. Only first level, 3 formulas are only there. Cost variance, it is the overall change in the cost. So it is a standard overhead cost minus actual overhead cost. Standard overhead cost, it is going to be, how did I define? Hours into recovery rate per hour. So it is SRR per hour into standard hours minus ARR per hour into actual hours. So in my overall change, which change am I first going to nullify? Sir, the impact of recovery rate. That is my budget or expenditure variance. It is a difference in recovery rate, convert into value. Yes, into hours, which hours multiplier is always going to be actual here. Yes, difference in recovery rate. It is my SRR per hour minus ARR per hour into actual hours. Yes, once my difference in recovery rate is nullified, now onwards, wherever I have to use recovery rate, which recovery rate I will use? I will use SRR only. Efficiency variance, what is changing? Hours is changing. So I will tell it is difference in hours, convert into value into recovery rate. Which recovery rate? SRR per hour. So it is a standard hours minus actual hours into SRR per hour. Is this clear, everyone? So variable overhead cost variance is also over. Yes, fixed overhead we'll do it later. Before that, let us do sales variance, because all these are variable in nature. Okay, shall we proceed to sales variance? Yes, sir. So before we proceed to sales variance, first let me define sales. Sales is nothing but quantity into price. How many units you sold, at what price you sold. First, the most important thing I should remember in sales variance. Till now, wherever I was writing difference, I always did standard minus actual, because it was cost. Yes, standard cost should be more, actual cost should be less. That is favorable. But this is sales, boss. Money is coming. Actual sales should be more. Standard sales should be less. So I will always be writing it as actual minus standard. You can write it as actual minus standard or actual minus budget. Interchangeably they are used. First is the sales variance. Overall change in the sale value. It is going to be my actual sale minus my standard sale. How did I define sale? Quantity into price. It is actual quantity into actual price minus standard quantity into standard price. You can use budgeted quantity into budgeted price also. Doesn't make a difference. Okay, perfect. So in the overall change, what am I first going to nullify? The impact of price, difference in price. Difference in price convert into value into quantity. Which quantity? Entire actual quantity. It is a sales. First, what is going to come? Actual. Actual price minus standard price into actual quantity. Now that the difference in price is nullified, wherever I will be using price, from now onwards, which price only I will be using? Standard price only. So here my multiplier is always going to be standard price. Volume variance, what is changing? Sir, quantity is changing. So it is difference in quantity convert into value into price. Which price? Standard price. Difference in quantity means actual quantity minus standard quantity into standard price. Is this clear, everyone? Perfect. Now further analysis, you have to be very careful here. I have actual quantity, I have standard quantity. In between I will bring in my RSQ. Here you will have to think before you are going to do it. Actual quantity means it is actual quantity in actual mix. This is going to be standard quantity in standard mix. Revised standard quantity, it is actual quantity but in the standard mix. You are comparing AQ and RSQ. This is actual quantity in actual mix. This is actual quantity in standard mix. Mix is changing. So it is going to be my mix variance. Yes or no, everyone? It is AQ minus RSQ. Yes, I get the difference in quantity, convert into value into standard price. I am comparing RSQ and SQ. This is actual quantity in the standard mix. This is a standard quantity in standard mix. Mix is same, only quantity is changing. It is the quantity variance, which is RSQ minus SQ. I get the difference in quantity, convert into value into standard price. Till here things are fine. Fine. Now let us take our discussion forward. In sales variance, technically there are 15 formulas, but I told boss, let us understand the basic 5 formulas. Then I have just told you the tweakings to be done.
Yes, in case of reconciliation, I'll have to calculate sales variance in terms of contribution in case of marginal costing or margin in case of absorption costing. How to do? Very simple, three simple principles I've told. Okay, boss. How am I going to do it? Firstly, my total variance, I will not calculate. I will just tell it is a price plus volume. Principle number one. Principle number two, price variance. I told you that if my price has increased by 20 rupees, it means that yes, my contribution has increased by 20 rupees. It means that my margin has also increased by 20 rupees. So my price variance, whether I calculate based on yes turnover or based on contribution or based on margin, it is going to be same only. So I will be calculating on turnover basis. Yes or no, everyone? So my price variance, I will always be calculating based on price. How am I going to do? I have already written the formula. Yes, it is a difference in price convert into value into quantity. Actual quantity is going to be actual price minus a standard price into actual quantity. Perfect, everyone. Next comes volume variance and its further analysis. Volume variance and its further analysis. Volume variance. Suppose I sold 1 unit extra. Suppose I am selling every product at 100 rupees. Yes, the extra turnover is 100. But whether my extra profit is 100, no boss, variable cost, fixed cost also I am incurring. So here I cannot be doing it that way. That means individually I should be doing. Tell me students, volume variance, what is the base calculation? Volume, what is changing? Difference in quantity. Convert into value, into price, I was doing into standard price. But if I multiply with standard price, I will get the overall change in the value. If I want only in terms of contribution, I will multiply with the standard contribution. That is difference in quantity into standard contribution. If I want in terms of profit or margin, I will multiply with the standard margin per unit. So it is difference in quantity, which is actual quantity minus a standard quantity into my multiplier is going to be either standard price or standard contribution or standard margin. Is this clear, everyone? Perfect. So with this we have finished sales variance also. Is this clear, everyone? Perfect. Maja is coming. Yes, everyone. So let us take our discussion forward. Go ahead to the final variance, which is going to be fixed overhead cost variance. First, let us remember the names and what exactly it is indicating. First, fixed overhead cost variance. What is it? It is the overall change in the fixed overhead cost. Two, bifurcation. Fixed overhead budget or expenditure variance. Here, what is changing? Here, cost is changing from my budget versus actual. Yes, next I am having my volume variance. Here, what is changing? My output is changing. Volume variance, further analysis. I have calendar, capacity, efficiency. Calendar, what is changing? Days is changing. Capacity, what is changing? My input hours is changing. How much hours I am putting in is changing. Efficiency, what is changing? Output hours, that is my speed is changing. Yes or no, everyone? Perfect. Why fixed overhead cost variance becomes difficult? Because till now every variance calculation was just standard minus actual. But here, different places, different assumptions I am doing. Some places I am doing standard minus actual. Some places I am doing budget minus actual. Some places I am doing actual minus budget. So for that, I have given you guys one simple mantra. Yes or no? What is it we told? First and last, that is cost and efficiency, I will be doing standard minus actual comparison. Second variance, that is my budget variance, I will be doing budget minus actual comparison. All my balance variances, that is volume, calendar, capacity, I will be doing actual minus budget comparison. What is it, students? First and last, that is cost and efficiency is going to be standard minus actual comparison. Okay. Second variance, that is budget variance, is going to be budget minus actual comparison. All my balance variances, it is going to be actual minus budget comparison. Yes or no, everyone? And one more thing, yes, in case of volume variance and its further analysis, the multiplier is always going to be SRR, that is the standard recovery rate. Now if this much is clear, let us go ahead. First is cost variance. In cost variance, what am I comparing? The overall change in the cost. It is going to be my standard overhead cost minus actual overhead cost. Standard overhead cost, I told it as SRR per unit. For 1 unit, how much? Into actual output minus my actual overhead cost. Is this clear, everyone? Perfect. So let me do it this way. Tell me first and last, that is cost and efficiency. How am I comparing? Standard minus actual. Here what I did? Standard minus actual. First and last. Last is what? Efficiency. In efficiency, how am I comparing? Standard minus actual. What am I comparing in efficiency? Sir, hours I am comparing, sir. How do I want the comparison? Standard minus actual. Hours I am comparing. I want it as a standard minus actual. So I got it as standard hours minus actual hours. I will be getting the difference in hours, convert into value, multiplied by SRR. Yes, how am I having the difference? I am having the difference in hours. So multiplier is going to be SRR per hour. If my difference was in units, it will be SRR per unit. If my difference was in days, it will be SRR per day. As simple as that. Okay, sir. First and last, cost and efficiency is going to be standard minus actual. Sir, second variance, sir, budget variance. How am I going to compare budget minus actual? What is my second variance? Budget or expenditure variance. Here, what am I comparing? Cost I am comparing. How much overhead cost I thought will be there, budgeted cost. How much is the actual cost? How I want the comparison? Budget minus actual. So it is budgeted overhead cost minus actual overhead cost. It is already in terms of rupees, so there is no need to convert. Okay, perfect, boss. All my balance variance, that is volume, calendar, capacity. How am I going to compare? Actual minus budget. Now tell me, in volume, what am I comparing? Output. How do I want the comparison? Actual minus budget. So it is actual output minus budgeted output. I get the difference in units. Convert into value. SRR per, because the difference was in units, I multiplied by SRR per unit. Calendar variance. What am I comparing? The change in the days. How I want? Actual minus budget. So it is actual working days minus budgeted working days. I get the difference in days. Convert into value. SRR per day. Next I am having the capacity variance. Here again I am comparing the hours. Here I am comparing the input hours. How much hours we worked. Yes, again how I want? Actual minus budget. So it is actual hours minus budgeted hours. But for actual working days, I get the difference in hours. Convert into value. SRR per hour. Is this clear, everyone? Perfect. The next thing is, how do I calculate SRR? Standard recovery rate. When am I calculating, students? At the start of the period. Tell me, at the start of the period, only which data is available? Only budgeted data is available. So if I want SRR per unit, it is going to be budgeted overheads divided by budgeted output. SRR per hour, it is budgeted overheads divided by budgeted hours. SRR per day, if I want, it is budgeted overheads divided by budgeted working days. Is this clear, everyone? Perfect. So roughly in 20 minutes, we have quickly revised all the formulas. Taka, taka, taka. I hope for a student who has listened to my classes already, followed things, yes, this revision would have added value. Now, yes, if somebody is watching it subsequently on YouTube, I am planning to upload it on YouTube. Now, maybe possible you would have understood, may not be possible because I have not explained. Because this is a chapter just to explain the basic formulas. I am taking somewhere around 10 hours just to build that. So you cannot be expecting in 10-20 minutes I am going to tell you all the logics. But for students, after 10 hours of explanation, just in 10 minutes, we can quickly finish it off. Is this clear, everyone? Yes, one style of revision I have done. Now, one more style of quick rocket revision. Same formulas, but slightly in a different way I have aligned, so that from one more perspective also, let us quickly revise it. Giving you guys a minute just to let this sink in, then we'll continue our discussion, my dear students. Yes, everyone, so let us try doing this revision from a slightly another perspective. Okay, yes, first let me define the basics. Tell me, how did I define my material? Yes, material cost, I told it is nothing but quantity into price. Labor, how did I define? Hours into rate. Variable overhead, it was hours into recovery rate. Yes, sales, fixed overhead, we'll do it at the end. Sales, it was quantity into price. Is this clear, everyone? Perfect. Very simple thing we are going to do. First is the total change. Yes or no? Overall change. Yes, in case of material, the total change is called as, yes, material cost variance. Yes or no, everyone? How is it? The overall change, it is the standard cost of raw material minus actual cost. I know the cost, quantity into price. So this is standard quantity into standard price. This is actual quantity into actual. Yes or no, everyone? In case of labor, yes, it is going to be, yes, overall change, labor cost variance. Yes, it is going to be standard labor cost minus actual cost. Here one important thing, I will keep it on the back of my mind. Yes, first two formulas, I will use actual hours paid. Third formula, I will use the difference. Balance variances, I will use worked. Is this clear, everyone? Perfect. So accordingly, I will derive, yes, it is a standard hours into standard rate minus actual hours into actual rate. Actual hours worked up, paid it is going to be. Yes, variable overhead, it is hours into recovery rate, overall change, variable overhead cost variance. Yes, it is going to be standard overhead cost minus actual overhead cost. Is this clear, everyone? Okay, perfect. Now, in case of sales, sales variance, but here I have to be careful. Everywhere was cost, so I was doing standard minus actual. Here it is going to be ulta. It is going to be actual sales minus standard sales. I know how to further, yes, open this actual sale. Sale is how quantity into price. So actual means actual quantity into actual price minus this is standard quantity into standard price. As simple as that. Okay, fine. Now in my overall change, now what am I first going to nullify? I am first going to nullify the impact of price. Tell me, in case of material, yes, the impact of price. In case of labor, the impact of rate. Here, recovery rate. Here, price. And what is going to be my multiplier? My multiplier is always going to be actual. See how simple it is going to be. Yes, in case of material, I am going to nullify the impact of price. So it is a difference in price. Convert into value, I have to multiply by quantity. Which quantity? Entire actual quantity over. Yes, in case of labor, yes, it is a change in rate. So I will write down it is a difference in rate. Convert into value, I have to multiply by hours. Which hours? Entire actual hours. In case of variable overhead, it is a difference in recovery rate. So it is a difference in recovery rate. Convert into value into hours. Which hours? Entire actual hours. In case of sales, it is a difference in price. Convert into value, yes, into quantity. Which quantity? Entire actual quantity. Yes, now that my price is nullified, from here onwards, whenever I will be using, my multiplier will always be standard. Yes or no, everyone? So look at this. In case of material, I have nullified the impact of price. Now I am having the impact of quantity. So it is a difference in quantity. Convert into value into price. Which price? Standard price. This is my usage. Further analysis, if I want to do sub usage or yes, yield variance, here I am having mix variance. This was SQ minus AQ. I have to further break it down. Yes, what happened to the screen? Okay. This becomes SQ minus RSQ, convert into value into standard price. This is RSQ minus AQ, convert into value into standard price. Is this clear, everyone? Okay, perfect. In case of labor, I have nullified the impact of rate. Now, the change in hours. Change in hours can be because of two main reasons. Yes, either it can be idle time variance or it can be labor efficiency variance. Efficiency, further analysis, sub efficiency variance or yield variance. Yes, then I am having my labor mix variance or labor gang variance. Okay, tell me what have I nullified? I have nullified the impact of rate. Yes, now onwards, yes, I am only having the change in hours. I will be using which rate? My multiplier is always going to be standard. Okay, idle time variance, it is because of idle time hours. Convert into value into standard rate, it is going to be. Efficiency variance, it is going to be the difference in hours. Convert into value into standard rate, it is standard hours minus actual hours into standard rate. Sir, actual hours worked or paid? First two paid, third one difference, balance is going to be worked. Further analysis, yes, I have SH, I have actual hours worked. In the middle of the two I have RSH. First two is going to be sub efficiency, next two is going to be mix or gang. So it is SH minus RSH, convert into value into SR. This is RSH minus actual hours worked, convert into value into standard rate. I hope this is clear, everyone. Next, let us go ahead to variable overhead. Overall change we have seen. In that we have nullified the impact of recovery rate. Now we have to nullify the impact of hours. So it is going to be difference in hours, convert into value into recovery rate per hour. Which recovery rate? Standard recovery rate. Perfect. Now coming to sales variance. Overall change I have seen. In that I have nullified the impact of change in price. Now I am having the impact of change in quantity. I have the volume variance, difference in quantity, convert into value into price. Which price I am having? Standard price. Now if I am going to further analyze, this is AQ minus SQ. I have AQ, I have SQ. In the middle of the two I will bring in RSQ. First two here is going to be sales is ulta. First two is going to be mix, next two is going to be quantity. So mix variance is going to be AQ minus RSQ, convert into value into standard price. Yes, here I am having the quantity variance, which is RSQ minus SQ, convert into value into standard price. Is this clear, everyone? Okay, perfect. Now I am having my final thing, which is going to be fixed overhead cost variance. Okay, yes, overall we have to just remember the mantras. Yes, first and last is going to be standard minus actual. Second is going to be budget minus actual. All the balance is going to be actual minus. Yes, first variance, it is a cost variance, overall change in the cost. It is a standard overhead cost minus my actual overhead cost. How do I get standard overhead cost? It is SRR per unit into actual output minus my actual overhead cost. Is this clear, everyone? Okay. Second variance, I am having my fixed overhead budget or expenditure variance. What am I comparing? Cost. Tell me for second, how do I want the comparison? Budget minus actual. So it is going to be budgeted overhead cost minus actual overhead cost. Is this clear, everyone? Next, further analysis, I have volume. Further analysis, I have calendar, capacity, I have efficiency.
So one by one, let us try doing it. Tell me, first and last is going to be standard minus actual. So last is going to be efficiency. What am I going to compare? Hours. How do I want standard minus actual? So it is standard hours minus actual hours. I get the difference in hours, convert into value, SRR per hour. Yes, everywhere else. Yes, first and last is standard minus actual. Second is budget minus actual. Everywhere else is actual minus budget. So volume, what is changing? Output is changing. How I want? Actual minus budget. So it is actual output minus budgeted output. I get the difference in units, convert into value, SRR per unit. Further analysis, calendar, what is changing? Days. So it is actual working days minus budgeted working days. I get the difference in days, convert into value, SRR per day. I have my capacity, what is changing? My input hours is changing. It is actual hours minus budgeted hours. For actual working days, I get the difference in hours, convert into value, SRR per. So literally all the basic formulas, I guess around 50-80 formulas, 2 times we have revised, that too in less than 30 minutes. I hope you guys have thoroughly enjoyed. Now, if you have not listened to the basic classes, point number 1, or when I was explaining, you were doing something else, you were scrolling, point number 2, or when I was scribbling, after explaining you understood, but every time I was scribbling, I was solving, you did not write it down, point number 3, or it's been a long time, you have not revised, you have not seen only, point number 4, or point number 5, this revision also you are seeing in 1.52x, there is absolutely no use now. Okay, yes, again I'm telling you can use it as many times as you want. Yes, there is no need for you to listen to this. You just take a piece of paper, you start scribbling. Formulas, trust me, will flow. You need not even think. Your hand will start writing down the formulas. That's how much effort we put in here. Is this clear, everyone? I take pride in telling that I make standard costing the simplest in the entire country. Nobody else can teach it in a much simpler way than this. But you have to be willing to put in that basic. So yes, I hope you listen to this. After that, if possible, prepare a beautiful chart. Yes, paste it somewhere else. Every time you want, you can keep looking into it, revising it. We are going to start with the interesting, beautiful unit, my dear students, from the next video onwards, which is going to be reconciliation. Trust me, we're going to make it very simple. Cakewalk, Maja Pro Max is going to come. That's all for this video. See you guys in the next video. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud. See you in the next video. Take care. Bye.